Hello and welcome. You're watching India Market Close. I'm Harsh Saita. With me is Neeraj Shah. Let's quickly look at how the Nifty is shaping up for the day. We're seeing around 0.5% lower on the Nifty, around 140 odd points lower. Let's look at it intraday as well. Get some perspective, 1% lower on the Nifty Bank. So this is no surprise. But we're at the day's low as we speak. Let's pull up the Nifty Bank intraday as well, and that'll give us perspective as to how the Bank Nifty is pulling down the Nifty, 1% lower on the Bank Nifty as well. So clear pressure coming in from the Nifty Bank onto the Nifty, and within the heat map of the Nifty, if we can quickly pull that one up, metals seem to be the one which is doing relatively okay. 3% higher on Tata Steel, 2.5% plus on JSW Steel as well. Ultratech having a good day as well on a day like this especially. But what's not doing well is the lenders. Look at those last four names over there, and then not so far behind are also some more financials, and HDFC Life and HDFC Bank or Geo Financial are some of those which are really pulling down the index. Reliance Industries also down 1% or so in trade. And let's pull up the contributors, and that will give us better perspective on what's happening. There you go. HDFC, Reliance contributing to around 77 negative points on the Nifty today. Couple that with an LNT and an ICICI Bank. This one's been a laggard this week. And you'll see why there is that drag. In terms of gainers, while there are a few, but just in terms of point contribution not coming from them, and which is why you're seeing pressure on the Nifty. Let's quickly look at sectors before I toss it across to Neeraj for broader markets. Metals 1% higher, I did mention that. Auto flat on a day like this, nothing much to complain about. Consumer durables resilient, 0.6% higher. But you're seeing PSU banks and the Bank Nifty under some bit of pressure. Realty is the other pocket which is under pressure. The Nifty India Defence Index is also down 1% in trade today. But Neeraj, the advanced decline, if we can pull that up while Neeraj comes in, that will also give us some perspective on how the day has gone. It's been a tough day.
It's been a tough day, all right, and when heavyweights are pulling the index lower,
yes,
it would show that way. But more importantly, this, which has not been for a while now, we're starting to see this, or at least seeing this today. Let's see if this becomes a trend. And you know, Harsh ties in beautifully with the conversation that we had yesterday, that if there is going to be volatility ahead of the July 9th deadline, it might be better to take some chips off the table. That, the quarterly updates haven't been that great, hasn't helped either as well. So key takeaways from the market today, I mean, we broadly know this, right? I mean, auto sales data has looked mixed with largely a negative bias, but the Nifty auto is holding out. And IT is bucking the trend, if you will, but difficult to predict continuity. In today's session, for an Infi to be up the way it is, it's pretty strong. But let's get the top movers and gainers. So the continued uptrend being seen in these two names. Gabriel, 20% yet again, second day on a trot. NSCL, another 5% after a series of 5% up moves that we've seen there. LPG compensation is likely. It's not moved the stocks though, HPCL. And you know, we spoke about this in the morning. Somit said that because this has been spoken about so much, it may not make a difference, and that's exactly what we're seeing. HPCL is down 1.5% today. The others are kind of likely flat in trade. Keystone Realty, of course, got a large redevelopment project, up about 3%. NMDC, a city note, downgrading the stock target price of 60 because of the cut in iron ore prices, and that is down. And yesterday's listings, so Globe Civil, Ellen Barry and Kalpataru, all of them are not having a good move. In fact, today's listing should come up. HDB Financial, still, actually both of them are steady in the session today.
Well, yes, in fact, the new listings today have shown remarkable resilience after that opening pop as well. They've held up fairly well for themselves. But let's bring in Shivangi Sarda to get us better perspective on how things are. Shivangi, what do you make of the markets today? Some bit of pressure?
Yes, absolutely. Very good afternoon, Harsh and Neeraj. Thank you for having me. So we've seen that there has been some sort of profit booking from the last few trading sessions. And honestly, we've rallied a good amount last week. And, the other favorable factors were also intact. But we've seen some bit of profit booking, and which has dampened sentiments. Nifty put call ratio is also below 0.9, which is creating some sort of call writers, strengthening. So overall, we are looking at short-term or maybe, intraday bias, which is becoming weak. But the positional support levels are still intact. So positionally, we are still on the buy on decline strategy with positive rollovers and seasonality-wise July being good. But, of course, in the immediate basis, maybe for the expiry day POV as well, we are witnessing some bit of pressure. We're looking at 25,350 very closely. This will be a major make or break zone here for Nifty. If it fails to hold above these levels, then we could see 25,000 marks. But overall, we are expecting these levels to remain sticky. And on the upside, we're looking at 25,750 as the next resistance for Nifty. Positionally, of course, again, reiterating it that buy and decline would continue over here. So talking about Bank Nifty, we've seen that, of course, there was outperformance in the previous week, today being a little slack on that front. But we've seen remarkable interest in the smaller banking names, which have caused the entire index to hold up quite well. Some of the heavyweights are still in some pressure, which is causing some bit of pain here. We're looking at 56,500 as the support here, with the upside towards 57,500 marks.
In particular, Shivangi, and we'll talk stock specific, but in particular, is there some bit of negativity building into the Bank Nifty and within specific names? And HDFC Bank, for example, slipping below the 2,000 mark, is that a big deal?
Now, Harsh, if we look at the RRG, that is relative, strength. If we compare the sectors, banking stocks are going into the weakening quadrant, which indicates that there would be some bit of a pause over here. Of course, we've seen the NBFCs and the banks in strength and rally from the last 7 odd weeks. So, of course, there is some bit of pause which is expected here. But overall, we are not, seeing a lot of underperformance here. Of course, 56,500, as I mentioned, is an important zone over here. It'll act as a make or break zone. However, positionally, rollovers have been quite positive, which indicates that, after this some time correction, the index will then again get ready to trade in the new lifetime high territory zones.
Okay, and Shivangi, your picks for this afternoon?
So on my radar, first up is Laurus Labs. We've seen that this entire space has witnessed good buying interest, and from the last 4 trading sessions, there has been remarkable volumes and price surge here in this one after it surpassed its previous hurdle of 680 odd levels. So the buying has been continuous, and we've seen that even on a month-on-month basis, we've come out of a consolidative band breakout and then good follow-up action here as well. So recommending a buy here on Laurus Labs with a target of around 750 and a stop loss of a target of around 790 and a stop loss of 750 levels. And, the second pick on my radar is Tata Steel. We are seeing a lot of action in the metal pack. Tata Steel specifically has witnessed short covering move, and we've seen that from the last 2 weeks specifically, it has recouped all of its losses of the June month, and we've seen that it is trading above its crucial exponential moving averages as well. So recommending a buy here with a good momentum trade for a target of 172 and a stop loss of 162 zone.
Okay. Shivangi, I just want to quickly bring up Laurus one more time because those rates didn't come in correctly. Let's quickly pull that one up. Your call on Laurus is buy call 790 being the target, 750 being the stop. Am I right?
Absolutely.
Okay. So that's the call with regard
fairly
to
tight stop loss.
Yes.
Considering that the price is 756. Shivangi, you must be unusually confident about this.
Yes, Laurus Labs, we've seen that there has been a fair bit of a up move in the last 5 trading session. So we're maintaining a close stop loss over here. But of course, the kind of price stickiness at the higher zones is indicating that, this is getting ready for a good up move, even at these levels.
Got it. Shivangi, real estate as a bucket has sulked now for more days in the last 15 than probably any other sector. Is there a short idea in real estate?
Absolutely, Neeraj. Real estate pack has been, quite sulking. But of course, we've seen that these stocks have been quite lackluster in terms of the price movement. If we look at some of the names like Oberoi Realty, these has given up its gains of the weekly basis. But on a weekly basis, we've seen consolidation from the last 3 to 4 weeks. So even though intraday there is some bit of a pressure, but on the higher time frame chart, the structure hasn't weakened yet. So a little wait and watch here. The stocks are at the levels where they could rebound. So fresh selling is not advised here.
Shivangi, I know that one of the calls you made was Tata Steel, but are you constructive overall metals, and where would JSW qualify if I were to push that into a list and give us your levels with regard to a JSW? Okay, believe that we've lost Shivangi for just a minute, but maybe, but you know, Neeraj, steel is something which is buzzing today. It's the top gainer on the Nifty 50, both Tata and JSW. Likely some bit of easing on raw material prices, keeping those stocks in focus. 3% higher on both of them. And we'll have a bull versus bear on this one as well. But it's interesting because from the lows, something like a Tata Steel, something like a JSW Steel has really rebounded.
Yeah, they have. And I wonder if some part of it is also got to do with the whole thought of rebuilding of select portions which have been under strife recently, as also maybe, just maybe, optimism around China spends if that comes about. So, I mean, all of that on the table, presumably.
Maybe we need to wait a bit and take Shivangi's view at the end of this segment. What we'll do is we'll quickly move ahead. We have Chintan Haria with us, Principal Investment Strategy at ICICI Prudential AMC, joining us. Welcome and good afternoon, sir. And the conversation will largely be banks. Talk to us first off about the sector as a whole. We've seen cuts in terms of the repo, which means that you will see some amount of pressure in the near term with regard to both margins and ROA. You've suggested as part of your note or your thesis saying that banking is still a predominant part of the Nifty profitability. Would you see that that may not be the case, at least for the current fiscal, or do you see that as continuing to drive Nifty earnings?
Yeah, thanks, Harsh, and hi, Neeraj as well. Effectively, if we look at banking, we are not only looking at banking as its core, but also the entire gamut of financial services which encompasses with the banking and gets consolidated, right? So as we move from $3 trillion, $4 trillion to 5, 6, $7 trillion, that's one of the ways to basically participate in the India growth story. And while quarter to quarter the interest rates can keep fluctuating, and globally also we are uncertain about what will happen with interest rates, and in India it's more certain because we are blessed right now with a beautiful macro of lower crude oil prices and a very strong government revenue and balance sheet. So we don't have to worry about any significant macroeconomic event in India. Globally what happens is not in our control, but that's where banking as a segment, which accounts for more than 30% of almost all broad market indices in India, is a play on growth. And as and when foreigners will come back in terms of the Indian markets, we believe that banking is the segment which is one of the most liquid and large plays on India. And with the consolidation that has happened in the banking sector over the last 5 to 7 years, and with the private sector banks now accounting for 40% of India's business, right? It used to be less than 10% when I started my career in 2007-8. So in 17-18 years, we are talking of from 10% to 40% and growing faster. So a larger piece of the share from the private sector banks, and they form a large part of the indices as well. So that's where we believe from an investor standpoint, banks in general and private sector banks definitely are something which should be part of their core portfolio.
But Chintan, this is an everlasting debate. PSUs have also turned a corner, public sector banks, and therefore, how do you view that pocket? Because that's a pocket which has now turned around completely. Is there any additional lever left or additional steam left for them to surprise on the upside, both in terms of earnings or growth?
So I think if you look at, you're right, as far as credit costs are concerned, the NPA cycle is concerned, we are at its nadir in that sense. The balance sheets are clean. Going forward, if they are able to the deposit mobilization in PSU banks is also reasonably strong. It can be stronger, but of course, with the way the equity markets are performing in general, we are seeing deposits, deposit accretion in the system being smaller because of real estate and equity markets doing well. Having said all of that, PSU banks are a very strong force in terms of their reach across India. So they will perform well, but we do believe that among the overall pack, private sector banks can possibly grow faster. PSU banks will also grow because of the consolidation that they've seen. So net, the levers are there for them also to do well, and I think they are also well efficient managed. And more importantly, again, going back, the subsidiaries of some of the large PSU banks are doing fantastically well in terms of insurance or AMC business. So if you consolidate all of that, there is value there as well, and arguably there will be immense value. So maybe the foreigners don't come and buy them immediately, but at least as far as we are concerned, we see value across the PSU banking chain as well.
Got it. Chintan, good talking to you. It's been a while, but good to see you. So the question would be, I mean, I believe you guys are launching a product as well with regards to the private banking space, right? I mean, is it only private banking focused? And if you are constructive on PSU banks as well, why is it only private banking focused?
So if you look at from a product perspective, the private bank ETF was launched way back in 2019, right? So we had the bank ETFs available, which had private and public together. Then we launched India's first private bank ETF in 2019, I guess. And this launch currently, which we are speaking from 1st July to 14th July, is the private bank index fund. So the platform is on the index fund side, which makes it easier for those who want to do SIPs as well as participate on the mutual fund side. So ETF is already there of the private bank, and we are basically extending that to the index fund now for those who want to participate on the index fund route. So that's where it is available. And if someone wants to participate in the banking per se, then anyways the bank ETFs are available and the bank index funds are also available. So this is just one add-on if you want to focus on the private sector banks, which arguably have grown fast over the last many years, not in terms of price movement of the stocks. Of course, I'm talking about the market share that they've gained over the last 10 to 15 years. Then basically the private bank index fund becomes a good add-on to the overall portfolio of investors.
Okay. And I'm presuming that you reckon that this cycle will last for a bit. The only question to my mind that comes is that with all the rate cuts that have happened, there is a belief that in that BFSI space, the non-banks could actually have a swifter run in the near term, let's say in the next 12 months, maybe next 18 months. I know you building out a product for a longer time, but could it well happen that banks underperform NBFCs over the course of the next 12 to 18 months?
Tough to predict, but if we look at not just NBFCs, but the entire capital market players, insurance companies, etc., if you look at the last 3-4 years, they've already done very well, especially the capital market players, right? Wealth management, AMC businesses, etc. And if we compare essentially that as a segment also, within that, a few years back, we did launch the ICICI Prudential Bank Nifty Financial Services Index. So if someone wants to play that, there is a product for that also available. But it is tough to predict which way in the next 12 to 18 months, whether it will be NBFCs which will do well or banking. Surely from a risk return perspective and stability perspective, we've seen banks provide a more stable long-term growth environment. And in lower interest rate environments, maybe NBFCs will also have a place since their cost of funding comes down. But overall, I think the entire gamut of financial services in India is going to grow. And as you mentioned, it is meant for the long run. So when indices are at their highs and anyways, it is difficult to find value in the markets that easily, this becomes a good fitment from a long-term patient investing perspective. These are not products meant for 6 months, 12 months anyways, as you rightly mentioned.
And Chintan, how should one look at growth at this point? Private banks have always grown at a far faster clip, and I would say far faster clip to the industry than has been the case in FY25. FY25 has been a slightly muted year, even for private banking growth. Is that a concern for you? Does that reverse in FY26? And does system growth as well pick up in FY26? How do you view that?
So I think it's a question of where in the cycle we are. The capex itself in the system, the private sector capex itself has not picked up too much. It's essentially the public sector, the government capex, which is driving large part of the growth. And there are unutilized capacities within the private sector which are still remaining. And we've seen obviously a slowdown in consumer facing segment also. So all of this put together, there is probably a speed bump in terms of the growth. But as we move along FY26, FY27, as probably the budget cuts in terms of taxation puts more money in the system, the rains have been reasonably good. We are hoping for a bounce back because last year being an election year, the June quarter was muted. So YOY, if the June quarter results look better, hopefully there's a bounce back there. But more importantly, from a 2, 3, 4-year perspective, we do believe that the entire segment is going to benefit from the growth. But is it going to be like the thing is, if inflation comes back significantly, dollar depreciation is one thing which we are seeing. One of the worst years, so first half years for dollar, almost 11% depreciation. If it depreciates a lot more, and we are seeing inflation in the system and in inflationary environment, there is a chance that the growth in loan growth, deposit growth also looks better because prices will go up. So it may not be good from a macro perspective, but from a banking growth perspective, we will probably see well. So inflation is something which we probably all can expect to go up if US goes the way of dollar depreciation to manage their debt. And if that happens, then equity markets also benefit, and of course, in turn, the growth as far as the banking sector is concerned.
Okay. Chintan, last question with regard to how you stack up your preferences. NBFCs are obviously seem to be somewhere lower down, banks somewhere in the middle. So between banks, would it be PSUs first, private banks first? How does that stack up? And where do insurers and AMCs stack up at this point? Risk, reward, growth, all of that included. Just give us a broad sense.
So I think if you look at the overall valuation piece, clearly the pure banking is reasonably valued. And there, because they've seen a slowdown in terms of the past growth in deposits and loan growth, that segment improving, and when foreigners come back, they're probably going to buy these first. So that stacks up higher. As far as insurance is concerned, that is also an evergreen theme in India, and that probably is secondary. They've also gone through a consolidation phase. The other aspects of capital market plays, because the markets have been so buoyant, probably the valuations are not so cheap across many of the capital market plays. But if you look at the long-term runway growth, 5 years, 10 years, then probably those valuations are also justified. So as long as there is no major accident globally, and we don't see a financial crisis globally, I think that in India, the growth being justified, and hence the valuations are what they are. But it's about picking the right segments within overall, and I think the best ways to play it is through the banks itself.
Okay, Chintan, we'll let you go on that note. Thank you for coming in, speaking with us. It was great getting that perspective with regard to the whole financial sector. All right, and we'll quickly move ahead as well. Stock of the day, Paras Defense. Stock is up over 3% in trade, and I would want to attribute that to the conversation we had today morning with Paras Defense's management. So bullish, Neeraj, with regard to the way he was defining the product and defining the addressable market for the product. Those couple of factors really stood out for me. But before we have that conversation, let me go across. We have Anushi standing by to give us what's keeping Paras in focus and what stood out in terms of commentary. Anushi.
Thanks for that, Harsh. So a couple of trigger points that we've seen for Paras Defense. Firstly, the rally in the defense sector that we've seen in the last 3 months or so. The stock is up over 70% in this last 3 months period itself. But today's focal point remains on the 22 crore of an order win that the company came out. It in fact has bagged a 2 crore of an order from France-based Surbear, and this is for an anti-drone solution system that we are looking at. So it's entering into that field as we are speaking about. So the deal is to supply 30 Chimera 200 system. What exactly is this Chimera 200 systems? Let's understand that. Now, this is a counter UAS system, that's unmanned aerial system that we are looking at, which is designed to neutralize hostile drones as we speak. So the focus would be to protect in the areas in the European region that we are looking at. Company aims to unlock new export opportunities forward with this kind of an order that we are looking at going forward. But what are the key takeaways post the NDTV Profit interview which took place? Firstly, the domestic market will continue to remain potent, extremely potent, as far as where the focus will be divided between the export side and the domestic side. As far as where the project or rather the product consideration is considered, they believe that this is 100 crore of an opportunity for this product. This is even on the conservative side that we are looking at this figure. In fact, the volumes are expected to cross even more than 1,000. So that is something that we should be keeping in mind. It is an interesting development that we are seeing as far as where this product could lead to the incremental revenue growth for the company. In terms of how the order book has so far fared for the company, it's a 835 crore of a figure that we had last seen in the presentation in Feb 25, but the management had emphasized that the current order book has exceeded 900 crore mark. This is a growth from 600 to 300 crore that we are looking at earlier. If you look at the current order book positioning, as spoken about earlier, it has exceeded the 900 crore mark that we are seeing. In terms of where the management guidance is concerned and where the financial performance is, it had clocked in a strong FY25. Revenue was up over 44%, while if you look at the margin side of the picture, that was also at 26% as compared to 21% in this financial year. Net profit seeing more than a double growth as well in FY25. Now, in terms of where the high value opportunity for the business is concerned, firstly, laser system, 3,000 crore of an opportunity, optical telescope along similar kind of a size that we are looking at, along with that existing business and optical system will lead to about 2,000 crore and 6,000 crore of a market opportunity that we are seeing. This is over the next 5 years of a timeline that we are looking at. Management has guided that they want to become global leaders in the optics, optronic systems over the next 3 years. They are seeing a revenue growth of 40% as well going forward, and this is along with a better profitability that they're expecting this to continue. However, what could be the only consideration now for companies like Paras Defense is the valuation pictures, because of the kind of run-up that we've seen in the last 3 months or even the 6-month period. It's the valuations more than a 60-70 times of a multiple that we are looking at. So will the stock continue to remain in favor is something that we should be watching out, but the order inflow projects and the outlook continues to remain on the stronger side.
Well, Anushi, thanks so much for putting all of that into perspective. On a weekday, it's held out. In fact, Harsh and Anushi spoke about the management commentary. Hear out what Amit Mahajan, who is the director, spoke about this when he was asked about the significance of this order. Listen in.
The significance of this order is not in the value. It's in the mindset of a global consumer, which he started looking at India not just as a manufacturing hub, but today is looking at India as a development hub. Now, today, the technologies that can be developed are no more the responsibility of the West, and they have started believing that an Indian company can develop a system and a European company can consume it. They have been magnanimous enough to understand this and then put their layer of software or algorithms and then deploy this particular system for their customers. So this is a paradigm shift that I would like to see. It definitely opens the floodgates, but it's a change in mindset which is going to be permanent from here on. It was already beyond 900 as we closed in the financial year. And considering we have executed a large part of it now, we maintain that particular order book even after execution of Q1.
Okay, so that was, of course, Paras Defense. And Neeraj, you had that conversation. Now, before we delve further into this, we'll obviously take views on Paras Defense. Let's slip into a short break. On the other side, we'll have heard on the street, and we'll talk more about Paras Defense and defense in general as well. And we'll take maybe Neeraj's few takeaways, key ones that he took out of that conversation with Paras Defense. Stay tuned.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
imports become the exception rather than the norm. And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims?
Back with India Market Close right here on NDTV Profit. Now, at that time of the show, when we get you all the dealing room chatter, what is it that is worth knowing? From the dealing rooms, Somit Sarkar joins in with that intelligence. Somit, what are you picking up today?
Well, multiple stocks that remain in focus. Firstly, it's Marico. Now, if you look at the share price chart of Marico, it has seen some wild moves. At one point of time, it was down 2%, then it became flat, and now again it's down 1.5% in trade. Now, what dealers are indicating here is that there are sell flows on FI at desk on anticipation that the Q1 FY26 update could be on the weaker side. So keep an eye out for Marico. Then there is Vedanta and Nalco. Now, dealers indicate that there's a pair trade that large HNIs have taken. They are buying Vedanta and they are selling Nalco. Now, specifically for Vedanta, dealers indicate that NCLT hearing and the outcome related to demerger could be announced anytime soon, and hence this kind of buy flows that we are seeing for Vedanta. When it comes to Dixon Tech, dealers are indicating that despite that big downgrade that came in from Morgan Stanley yesterday, we are continuously seeing strong buy flows that are coming in for Dixon Tech. Now, a couple of reasons that they have highlighted. Firstly, they are saying that the Q1 numbers are expected to be very strong from Dixon. The growth could be northwards of 30-odd%. And secondly, they are saying that the company might announce a joint venture with a global company. So these both reasons are mainly the factors why the stock, these both factors are mainly the reason why the stock has been gaining in trade. When it comes to Godrej Properties, dealers indicate that there are sell flows on HNI desk on anticipation of a negative brokerage report that could come in. When it comes to M&M Finance, the stock has been down in trade, and dealers are saying that the Q1 update could be on the weaker side. And when it comes to Industars, dealers indicate that there are buy flows on FI desk in trade. The key trigger here for Industar could be a big dividend that the company could announce or a buyback. Now, any of these announcements is due anytime soon from Industars, to keep an eye out for Industars as well. And Sagility is another stock that we should keep an eye out for. The stock is up around 7% in trade. There's a buzz on the street that an initiating note, a positive initiating note might come out anytime soon on Sagility India.
Wow, 6.5% and counting. Thanks a lot for that, Somit. And interesting to know about some of the expectations on the results. So that's
Not results, these are updates.
updates. Yeah. But what I mean
yeah.
is in the results season. So I'm guessing this is gonna keep Somit very, very busy because after some point of time, the quantum of results that come out in India, they inundate you literally. But on a slightly wobbly day, let's get in Kush Bora, founder of kushbora.com, on the charts and on the fundamentals. Vineet Bulinjkar of Ventura Securities. Absolute pleasure to have both of you on the show. Thank you so much, gentlemen, for joining in. Kush, not bad. I mean, you probably want some corrective moves as well to come in sometimes, so which is welcome and healthy maybe. But can this go deep?
Hi, Neeraj. First, a very good afternoon to you and to all the viewers. Hi, Vineet. As you very rightly pointed out, Neeraj, very rightly pointed out, you do need some sort of profit booking, some sort of pullback for, fresh entries. And this is what the opportunity, is. This is the opportunity that the market is providing. Now, let me also admit something that this move is slightly divergent to what the data was suggesting. The reason I say that is because yesterday itself, the PCR was a little under 0.7, at least on the, on the trackers that, we, that we track the data on, because I heard some others say that the PCR was close to 0.9, but at least anyway the data that we track, PCR was already just a little under 0.7. Even now it remains at 0.71, so already oversold on the PCR. Wix super low. Had this move come with a 4 or 5% spike on Wix, maybe more, and Wix crossing 13.5, 14, I would have perhaps taken that. But as I said, slightly contrary to what the data is suggesting. But yes, we would consider this more of a pullback move. And when we say buy on dips, these are the kind of dips that we talk about there, that the market is providing to enter. Now 25,400, 25,500, this is the support zone that we have been talking about. Markets did slip below this for a brief while, but right now they are they're within that band. So we should perhaps consider a more positional support zone, positionally strong support zone of 25,250. I still reckon that this is a market where you want to go long. The only data perhaps that is suggesting that this move was on the cards or is now perhaps market reacting to is the call base shifting lower. You had that at 26,000. Yesterday it was at 25,600, and today the call base has shifted firmly to 25,500. So while from an expiry perspective, which is today for the weekly options on the Nifty, the upside may be a little capped, I think positionally this is a good entry point and a good risk reward ratio for targets of 24,700 and 25,700 and 25,900. So yes, this dip does look like an opportunity to buy, especially considering that you're already oversold on some of the parameters.
Okay. Hi, Kush. Good afternoon to you as well. In terms of picks this afternoon, are you seeing those opportunities here, and what would be on top of your shopping list?
Hi, Tamanna. Given the optimism that I have on the market, no sell calls. I mean, I don't see these as selling opportunities, not just yet. So hence, both the calls on the buy side. One of them is sale. Metals have been doing well. And this one stands out along with a couple of other names that we've discussed in the past. So sale for a target of 137, 140 with the stop loss around the 130 mark can be considered long. It's had a good move in the last half an hour or so, and hence you might see it closer to the first target. So you might want to bump up that stop loss to 133. The other one is CESC. We are seeing a breakout here, a rounding bottom formation breakout. The stock sustaining above the 175 mark is a healthy sign today also. In a profit booking kind of a mode market, the stock is gaining grounds. So yes, relative strength apparent. 180 to 188 are your targets. 170 is where you place that stop loss. So yes, still constructive on the markets and the stock.
Okay. So constructive at this point, Vineet. Good afternoon. What are you constructive of on this point, looking at the kind of hit that we're especially seeing in Nifty Finance, Nifty Bank? Is there anything there that you're looking at as an opportunity to build positions?
So, what, I would want to wait on the markets because, I was expecting a rally into the 5th or 9th of this month, given that Trump's tantrums could be thrown open. But the fact that the market is reacting ahead of that has me a little bit circumspect. And I would like to wait on what the outcome is maybe on the 5th or 9th of this month. So not really recommending anything at this moment.
Okay, so let me come back to you on that. I found that interesting. Wait till the 5th of the 9th. Now, one of two things can happen ahead of the 5th or the 9th. I assume you are talking about the ongoing bilateral talks between India and the United States for the trade deal, right, Vineet?
Yes.
So, from what we're hearing right
Yes,
now, it's a very tough negotiation, a bit of a stalemate going on. And either way, it's not going to be something that either side can come and say that, oh, we had a great deal. Do you see a possibility of a huge negative, a huge drawdown as well?
So what it is that. So what is happening is that the international community is asking India to liberate a little bit too much. They are more dictatorial in their approach, and India is absolutely denying them on grounds where they are not ready to let go. Example is agriculture and your dairy. So there's a little bit of tiff going on, and I'm a little circumspect that we might not get a deal at the end of this period, and then the markets could possibly succumb to some kind of his tantrums that come in, and you never know what he will say if the deal does not go in his favor. And we have seen how vocal he is and how it has impacted sentiment. Also keep in mind that there is such a large flow of paper that is coming in, IPOs, that it would pressure the secondary markets. So just waiting on this, want this thing to get out of the way before we can say something more on the markets.
Okay. The other thing, Vineet, is the kind of, maybe it's too early to judge because it's only 2 days, but the pre-quarter updates that have come in thus far, or the auto sales, the numbers that have come in for maybe June at least, if not the whole quarter, aren't exactly very promising. Could it be a wobbly quarter? And which sector to your mind could actually deliver the weakest set of earnings?
So, since you pointed out to the autos, I believe that the autos with the results might spring in a bottom. And because everything is forward looking, all our tax cuts, interest rates cuts are going to act in the future. So I would want to buy the dip if there is any on the eve of the earnings. And here, the stocks that look good to me are the EV space stocks, especially TVS, Ather, and Bajaj. I'm still a little circumspect on Hero because I'm waiting for some kind of good noises to come around the numbers and acceptance of their models. But the other three I am very bullish on and positive, and I think they will do well going out after the results.
Okay, Hero may be in news also because of that Vida VX2 launch. Kush, just very quickly, Hero on charts, relatively to all of the other auto companies today, is doing well, and more because of the launch than the numbers, really.
No, Taman, I don't share that enthusiasm on the charts. It's been facing pressure at the 4400 mark, the 200-day moving average also acting up. Relatively speaking, TVS and Eicher Motor stand out, even though today they might be underperforming. But on the whole, if you see, these two have done significantly better. So if you catch a break above the 4400 mark for Hero Moto, then perhaps. But up until then, I think this will continue to consolidate.
Okay, Dreamfolks is the next stock in focus. Well, it's actually been in focus for a number of days now, but right now it's under pressure. It's announced because it announced closure of certain programs for Axis and ICICI Bank cards. Now, let's first get in Mahima with the details, and then we want to dwell on this a bit more because we just recently spoke to the management as well. But Mahima, to you first.
Rightly mentioned, yesterday in their filing they did mention that they have announced closure of certain programs from Axis Bank as well as ICICI Bank from 1st of July. The company has also said that the impact of closure of programs is likely to be material as well, but they've also come out and said that they're committed to to take actions that will mitigate the overall impact. But as you rightly mentioned, last week when we spoke to the management, they'd come out and said that there are no notices that they were receiving from clients for ending any kind of partnership. Of course, this is not an end of partnership, but of course closure of certain programs per se. Now, why banks are choosing to end end partnerships or closure of certain programs? The company did witness a temporary disruption of service in September 2024, post which there was sudden closure in at least 49 lounges across 34 airports in India. And if we see the revenue breakup of the company, 93% of their overall revenue comes from lounging services and 7% of revenue comes from non-lounge services. Now, recently banks are also going through structural changes in terms of where these credit cards stands. Banks are replacing blanket usage spends versus that of spend-based model. So that means a certain amount, after a certain amount of spending on your credit card, you'll be able to access lounges. Secondly, they're also entering into direct partnership with lounges rather than using a middleman like Dreamfolks. And thirdly, of course, credit card penetration in India is as low as almost 5 to 6 odd %, which has always been a problem. So considering all of this, this could have an overall impact on Dreamfolks going forward. So the question really is that if banks are trying to end their partnership or closing certain programs with them, will their going concern be under threat? And of course, if they're also planning to overall expand the non-lounge services, which is right now just 7% of their total revenue, how likely it is that they'll be able to scale at a larger scale. So these are the pressing concerns right now for Dreamfolks for sure.
Thank you for that, Mahima. I mean, we all had that conversation. That's why I'm bringing it up here with Harsh and Neeraj, where we spoke to the Dreamfolks management. And that's all right. These things happen in business. Just what I found a little surprising, and I don't know what you guys think, that when we asked the management very clearly, is this happening? They said no. Can this happen? They said no. Will there be an impact? They said no. And now it's happened. So,
I mean, I remember that conversation, Tamanna, wherein you're right. I mean, I don't have anything more to add, but for the fact that she said that there is not going to be anything on the anvil which could have a material impact. And well.
Yeah, and the disclosure today suggests otherwise. So yes, so clearly that story seems to have played out.
But which probably means that maybe, just maybe, this is not a done deal as yet. Maybe the stock could remain under pressure because now the street will start factoring in what if there are other cancellations.
How much more? The stock's down nearly 20% from the top.
Vineet, you have a view on...
A stock can be down 99% and still half further from there. I'm not saying Dreamfolks will do that.
No, Vineet, any view on Dreamfolks? I mean, simply, the thing is that cancellations like this can't happen in such a short span of time. Even if you were to believe that, okay, at that time there was nothing and then it's just something is not sitting well. But just your view on Dreamfolks?
I think it's overvalued and their offering is limited. And there is a new IPO which is hitting the street, a QR IPO which has got a lot of, non-lounge revenues. So people would be switching into that, exiting from this.
Conversation actually with that IPO team as well. All right, the other big story that we're tracking today on NDTV Profit, State Bank of India has decided to classify the loan account of Reliance Communications Limited as fraud. Quote-unquote fraud, a move that dates back to transactions from August 2016. Vishwanath Nair joining with more details.
Right. So what's happening with Reliance Communications essentially is that there was a loan agreement that was cleared by the banks, which were led by State Bank of India. This was a few years ago. And then since 2016, because the company has been under insolvency since then, a lot of scrutiny has followed. And now State Bank of India has gone ahead and classified the account as fraud. What has SBI done in the interim? Well, so over the last few years, State Bank of India conducted multiple checks on the company. They gave them an opportunity to speak back, come back with responses on the allegations that the banks are raising against Reliance Communications. And what the final outcome of this entire thing was that actually the company did not even give any clear responses. And because of that, now a committee within State Bank of India has decided that this account is apt to be called fraud. Going ahead, what is likely to follow now is that there's going to be a notice sent to the RBI about this specific account, and then within 30 days, a bank is supposed to report this case to the Central Bureau of Investigation, and on the basis of that, there will be an investigation that follows. Remember that the loan amount involved here is 31,580 crore approximately, and that's across multiple entities, which are Reliance Communications as well as its subsidiaries and associate companies. And it's on the basis of the loans extended there and the multiple sort of violations that the company has done in these loans, because of which State Bank of India is taking these actions. Specifically, what are the violations? They've taken money from the banks for a specific reason, let's say to grow the company or to invest in a certain business, and then instead channel it through other entities within the group and then use that money for reasons other than what they were described originally in the loan document. And therefore, State Bank of India is calling this account a fraud.
And there's a specific name of the account as well as the proprietors, isn't it?
Yes, because Anil Ambani was the director at the time when these events happened. So his name is specifically mentioned in this letter that State Bank of India is going to send to the RBI. There's a reason for that, because once you're classified as a fraud, you're not allowed to access public markets or debt markets for 5 years. And that is why the name of the proprietor becomes that much more important. And this action against Anil Ambani is going to be significant. What the CBI investigation will likely look into is the role that Anil Ambani played in these decisions that the company took. How much was he in the know? How much was he involved? All of that will come through during these investigations.
Okay. So that is one big story we're tracking. What else is happening in the markets right now? Let's talk about that. ITC, I just want to pull the ITC stock up for a second, and then we'll get to that exclusive story that Shrimmi is talking about. Look at that sharp dip. In part, reason could be because there are new sets of taxes to come on certain items, including cigarettes, which will be in that sin goods classification. So important story coming in from Shrimmi on NDTV Profit. There could be a higher cost to smoking cigarettes, drinking a cola, or driving a high-end luxury cars. We are learning that luxury and sin goods may attract an additional health and green cess. Shrimmi, is this going to be over and above what these items are taxed at right now?
Yes, indeed. What we are picking up at this point that the government is considering a proposal to introduce new health and green cess on luxury and sin goods, and a move that could lead to higher effective GST rates on select items such as you rightly mentioned, cigarettes, carbonated drinks, and high-end automobiles. So currently, Tamanna, these products fall under 28% GST slab and are subject to compensation cess. So as per the proposal, which is still under the deliberation phase, the compensation levy on these select items could be subsumed into the new health and green cess. So effectively increasing the overall GST rates on these select items. So the context here is clearly that the potential restructuring of this entire compensation cess regime is set to expire on the March 31st, 2026. And to replace that, we could see the health and green cess, maybe over and above the GST rate, which is 28%, or could be subsumed in the existing slab. Now, the discussion, what we are understanding from sources, is underway within the government, with both states and the central government is working on it. And in fact, this will be taken up as one of the key agenda of the upcoming GST Council meeting. Remember, the group of ministers being formed, led by MOS Finance Pankaj Chaudhary, who is exploring various options for the future of this compensation cess. And if you remember, 2.69 lakh crore raised to compensate the state for GST revenue loss will be fully repaid by January 2026. So the 40,000 crore which is remaining, from these compensation cess may be distributed to states as well, and that that formula is also expected in the upcoming GST Council meeting, Tamanna.
Shrimmi, just while you are with us, one more piece of information seems to be that the GST Council will take up rate rationalization matter in the upcoming meeting as well and may remove the 12% slab. Are you picking up something here?
Yeah, so this has been in discussion, Neeraj, for some time. In fact, the last council meeting already constituted a GOM to look into the matter. And in fact, the GST 2.0, which we have been talking about, is, moving towards three-tier structure. So sources was telling us at this point that this GOM is pushing for overall of the current 4-slab GST structure, which is 5%, 12%, 18% and 28%. So the discussion are ongoing to reduce the number of slabs now to 3, with the possibility of abolishing this 12% slab. But if implemented here, this change could see several goods, including certain food items, to go into 5% slab, while other could be shifted to 18% bracket. So the overall the purpose of this whole restructuring to simplify the GST system, of course, and reduce the compliance cost. But we will definitely see that GST tax structure is moving towards 3-tier structure.
Okay. Well, the stories move the stocks. Shimi, thank you so much for that. Thank you for bringing us that update, and something that everybody watching with quite a keen eye, one would presume. Vineet, it's for long believed to be inelastic demand. I'm just trying to understand if indeed GST rates were to inch up higher. If not, would it have a demand impact on, say, a product like cigarettes, part one? And if not a demand impact, can it have a sentimental impact on maybe a business like ITC or a stock like ITC?
I think ITC is already taxed at the premium slab, so I'm not looking at too much of impact coming out there. So cigarettes are already at the higher tax slab, and some could move from 12 to 18. But ITC's products are primarily catered towards the upper end of the segment. It will get absorbed. It would be a one-time impact, and then things move on as normal.
Well, but the question was only, so the thought was only if this one would move up higher. Yes, they are at the highest rate, maybe cigarettes right now, but what if there could be some more, and which is, but Vineet is saying that he doesn't believe there could be a dramatic impact. Could there be a trade impact, Kush, on ITC? How do the charts look here? Because it's right now trading at the lowest point of the day. It was down, but it sunk further after this story has come.
There is no trade on ITC. The reason being that 410 has a very strong put base. Also, technically, this 405, 4010, is a bit of a support zone and has been acting up for some time. I would wait and watch. If it were to break this 410 mark convincingly close below it, then perhaps for levels of 400, you could consider a short trade. But for now, it seems to be holding ground. The volumes aren't really as big on the way down. So yeah, nutshell, no trade on ITC just.
No trade on ITC yet. What about an RBL, Kush? After flying high, and we reported this morning a statement coming in that there is no truth to a story in a newspaper today that Emirates NDB is going to be looking at RBL. Quite a bit of a hit is what it's taken. Is it at levels where you would feel comfortable buying? Kush, that question for you. RBL?
Yeah. I'm audible, guys?
I don't think you can hear. Kush, can you hear me? Okay, something's happened with Kush's line. We'll get that back. But let me get that question to you, Vineet, on RBL. Flying high and then now taking a break.
I think their NPAs are just too much to absorb. The market will not re-rate it. In fact, I won't be surprised if it goes to 180 levels now.
Okay. All right, so that's on RBL. Now, in terms of, the other piece that we spoke about was the defense counters and Paras Defense in particular. And both of you, Neeraj and Tamanna, both of you had a conversation with...
Actually, he did.
Okay.
Yeah.
So you did. What was your key takeaway? Because when I was listening in, he just sounded extremely bullish, right?
Yeah, so just laying it down very, very quickly, he said, one, that the product is, they are the lone star when it comes to this technology right now in the world. Two, it has the potential to open up newer clients because it can do anti-drone monitoring and whatever, negating the impact for various kinds of drones and various diameters of drone, something like that. And three, has the potential to enhance the share of wallet share from the existing clients as well. And when asked specifically about whether could something like this get him business worth in 100 crores, he said, no, that will be too small a number. So presuming that it can go to northwards of 100 crores into 4 figures, presuming that is the case, and I don't know whether that's an annual number or otherwise, for a company which is earning a revenue of 350, 400 crores, it certainly seems to be a large enough thing, and which is why I think the stock did what it did today.
Okay.
Vinit, do you have a view on this one? Sorry.
Yeah.
Vinit, do you have a view on
it's-
this one?
It just doubled in the last 4 months. It's a little too uncomforting for me.
Kush likes that. Vinit doesn't like stocks which have doubled in 4 months. Kush loves them because they give a good trading opportunity, isn't it, Kush?
No, I like it when I have been recommended 3 months ago.
You don't like it when you miss the bus. Okay, fair enough.
But Kush, your idea on Paras Defense.
So honestly, this is Vinit's subtle way of saying I told you so, or rather not so subtle.
Yeah. You can argue that. Never hurts, Kush. It never hurts. Jo dikhta hai wo bikhta hai. But yeah, tell us.
Yeah.
Recommended 4 months back. Congrats to you.
Wow.
Okay, this is too much conversation. Kush, come on. Let's try and get your trading idea on Paras Defense.
1750, 1830 are the next targets. Continue to hold good accumulation. Very strong support zone near the 1590, 1600 mark. That should act as a stop loss. So all in all, very constructive. I believe Tamanna had a question on RBL before my audio just conked off. So if it's all right, should I make a comment on that as well?
RBL, because RBL was the hot stock, right? And today, after that clarification has come in, it's taken quite a turn. Is it a buy right now for you?
Structurally, it's not broken any support zones per se. Positionally, also if you see the 270 mark, in the start of or rather the mid of 2024, the stock actually resisted at 270 for about 4 months, 3.5, 4 months, and hence the supply pressure. Even now, if you see the high for RBL was close to the 270 mark. So structurally, nothing has changed much for me. If I had a position, I would continue to hold. I wouldn't buy it just because the move is big today and we're at the low point of the day. I just want to see if this spillover comes in for tomorrow as well. If it does hold down, hold up around these levels, then you can again re-enter for targets of 270 with about 230, 235, that being your stop loss.
So that's the take on RBL as well. We're trying to cover as many bases as possible. Let's quickly take a look at the top 3 stocks on our radar at this hour. Jasmeet here with 3 of those. Jasmeet.
Well, right. First on my list is Keystone. 8 housing societies in Mumbai selects the company for large-scale cluster development project. This project is based out of in Andheri, and the GDV for this project stands at 3,000 odd crores. While the recent updates for the company gets an LOA for redevelopment project in collaboration with MADA, while for the redevelopment of GTB Nagar in Sign, and the total GDV for this project stands at 4,500 odd crore. While the next stock is RITES. The stock is up 5% in trade today, while the company received a purchase order from African Rail Company, while the order is to supply 2 fully overhauled locomotive trucks, and the size of the order is 3.6 million USD. Talking about the other orders that company also received on the same day, while the company's JV, that's RITES and Aryan, received an LOA from South Western Railway. The order is for Tumkura station redevelopment, and the size of the order is 37 odd crore. While the last one on my list to watch out is Sai Silk. The stock is up 11% in trade today after the company comes out with a business update for the quarter of June. The company received a turnover of 379 crore, which is roughly a 42% hike. And the company currently has 69 stores under the name of Kanchipuram Vayalakshmi Silks, and the company adds 1 additional store in this quarter. Currently, company has 4 new stores under construction, and let's see how the quarter 1 turns out for all these companies.
10% higher for Sai Silks as well. So, well, thanks a lot for that. So 3 very interesting buzzers. Kush, any opinion on any of these?
So from the realty pack, I think Keystone is seeing some selling pressure off the high point of the day as well. So I'd give it a miss, or at best a hold call with a stop loss near the 630 zone. I think in this space, Marathon is a stock that we've discussed time and again, continues to impress on the volume front. So if you don't have it yet, you might want to consider an entry in Marathon. 675, 700, looks like the stock could easily head to those levels in the coming days. 640 is where you place that stop loss. Sai Silk, very strong up move, still slightly off the overheated territory. So maybe if you want to consider a small trade with the stop loss near the 164 mark for targets of 174 and 178, you could still consider this momentum and very strong one at that.
Okay. Kala Mandir, Sai Silks basically. I'm just wondering, I mean, the business updates were good and if we have them, we can pull them up as well. But I'm just wondering what has prompted that kind of sari sales, silk sari sales in this season. It's not wedding season, it's not festive season. And what really is happening there would be interesting to hear from the company and understand what's happening there. I don't know, is this a stock you track at all, Vineet?
Yeah, so we do track it, and there has been a subtle shift towards sari culture among the Gen Z also, and there were recently articles around that a couple of days back. So I guess there is someone is doing some bottom fishing on this stock after that article is out.
It's very interesting you say that, and that perspective coming from Vineet Bolinjkar, Gen Z is wearing saris. If you're watching this, you're Gen Z or want to be Gen Z, and if you know someone who's wearing saris, please write to us in comments. We want to hear from you. And just on that note, a quick plug on this company that I'm speaking to on Disruptors this week is this sister duo who run a company called Suta Saris. They started from 6 lakh rupees, 75 crore turnover in 9 years, completely bootstrapped, have been denying investors left, right and center. Their innovation is that they've made saris which you are ready to wear. So even if you don't know how to tie a sari, it's fine. And they put pockets in their saris.
Very important.
Very important. I clearly have an audience who doesn't care for this, but
no, of course not.
I was impressed.
I'm impressed with the fact that somebody's thought of the innovation finally. Saris need pockets.
And wearing.
Yeah, Mahima.
I mean, you are wearing.
No, in the sense.
I didn't hear that.
For a lot of them, for a lot of us, we wouldn't know how to wear a sari.
Okay, I think we're going to stop this conversation with both of them who have nothing to add. Mahima's in the studio. I'm going to go to her in a bit and get her take on it. But meanwhile, the other story that we have today, Apollo Hospital has planned a separate listing of its omni-channel pharmacy and digital health business within 18 to 21 months. The demerger is expected to unlock value and drive growth. Earlier today, I spoke with Sunita Reddy, MD Apollo Hospitals, about what is happening with the company, and it was a detailed conversation, but this is something that stood out for me because in our interview to NDTV Profit, Sunita Reddy clarified what the leadership will look like and also what the roles of the family will be. It's an interesting family, Apollo Hospitals, because it has 4 sisters who are running the show, and what their roles now will be after this demerger is something that she talked about. Listen in. If you can give us a sense, ma'am, of what the leadership now looks like for both. What is this new entity going to be called? I'm sorry, I'm bundling up 2 or 3 questions, but around the same space. What is the leadership going to look like? When will it be listed and what are we calling it?
So the new entity is going to be called Apollo Health Technology.
Okay.
And what does leadership look like? Clearly, Shobna Kamaneni will be the executive chairperson. Shobna is my sister and has really grown the pharmacy business and has started the digital. So she will continue to lead this. We have an excellent team of professionals who are part of this. And Sangeeta Reddy, who is part of Apollo Hospitals, will also be on the board of the new company. And in addition to that, we have 4 independent directors. And of course, we have already got Advent as an investor who will now own 12.1% of the entity.
Okay, so
with regard to hospitals, I'm sure you're already familiar with the team.
Yes.
We have a very professional team, and we continue to have Preeta Reddy as vice chairman. I'm there as managing director, and Sangeeta also playing a role as joint managing director.
So I thought that was interesting. You can watch that whole conversation, of course, on all our socials. And she talks about the plan for the hospital business, for Apollo Health Tech, which will be the name of the new entity as well. Vineet, I wonder if you've seen this, this entire development. We saw the stock spike up on the back of the demerger, obviously, and the announcement, because the consolidated picture was not as healthy as just the hospital's business. But do you think that this is a great play if you are looking at hospital healthcare, either of the 2 entities? Of course, opportunity for the second one in about 18 months.
So very optimistic on both the ventures. Number one, Apollo Group trades at a discount to rest of the group. and there's a re-rating on board out here. And the other two businesses, I think they're high tech, future digital, and medication looks very, very good to me. Both should do well going ahead.
All right, Apollo Hospitals. Apollo Hospitals is a buy for you, Kush?
It is. Very good moves. Hasn't really been a vertical one way. Overheated kind of an up move, a steady gradual up move. Volume accumulation also interesting. This week and the last. So I think good upside still to be had on this one. 75 is the first level to look at on the upside. The recent swing highs. Once that is taken out, you're looking at the 7700 as well. 7300 good stop. So. Fairly healthy risk reward ratio, steady up moves on this one. So yeah, Apollo Hospitals does look good on the chart.
Okay, Vineet, do you like hospitals as a sector, and within that Apollo, how is it looking to you?
I just gave my view. I think that among the large caps, Apollo Hospital is quite undervalued. And with this demerger, what is going to happen is that the hospital space gets a lot of upside room to catch up with the peer valuations. Additionally, the digital tech and the medicines business is going to do, pharmacy business is going to do very well because it get its own concentrated buyers who are looking for high tech, high growth businesses.
Apologies for that, Vineet. Let me quickly go across bull versus bear segment. We have in focus Tata Steel. Mahima with us for that segment. Mahima.
Right. So to start with, in terms of how Tata Steel is doing in trade today, of course, there's a bull and bear case both. To start with, iron ore prices have seen a decline, and this could overall aid the margins for the company. Plus, the company has also taken cost control measures that could lead to profitability hike as well as margins improvement going forward. But Indian steel prices have declined 3 to 4% since May, so this could overall hamper the top line growth. In terms of the Netherlands business, Netherlands plant is nearly running at its full capacity and has turned EBITDA positive in Q4. So that's a big positive there. But while the Netherlands plant is actually catching up, the gains that the Netherlands plant is seeing is partly offset by the losses that the company is seeing in its entire UK business. Now, overall European steel prices are also up 44% QOQ to almost $367. But having said that, domestic steel prices are currently at a premium, and this premium is as compared to the imported steel, and this is despite of the 12% safeguard duty that India imposes on imported steel. So that's the bear case here. Lastly, in terms of where the guidance stands, they've targeted FY26 savings of around 11,500 crores. But if we look at the stock valuations, it's currently trading at EV to EBITDA of around 11.2 times versus its 5-year average of 7.76 times. So the stock is currently at a higher premium as compared to its 5-year average. So that's with respect to where valuations stand. Lastly, as to what analysts are recommending, there are 22 buy calls, 7 hold calls and 5 sell calls, but there is hardly any upside potential there because it's just at minus 0.5%. So no return potential per se for Tata Steel as of now, as to where Bloomberg analysts are suggesting. So this is the overall bull versus bear case for Tata Steel.
Okay, so that's on Tata Steel. Kush, firstly, thank you, Mahima, for that. Kush, do you have a view with regard to a Tata Steel?
Fairly bullish, Harsh, on Tata Steel. In fact, the entire metal pack, SAIL, Hind Copper, these are a couple of stocks that we've already discussed. As calls, Tata Steel also doing well. Momentum indicators are actually starting to flatten out a little, and the call congestion near the 170 mark would suggest a limited upside. But if that is taken out, then the stock could head to all-time high levels of 185 and higher. So yes, from a near-term perspective, there is resistance at the 170 mark, but overall the trend remains upwards. So if someone wants to consider, then with a stop around the 155 mark, you could take a positional bet on Tata Steel for targets of 185 and higher.
Okay, Vineet, do you like metals, and what within metals?
So within metals, I think top pick is Tata Steel.
Okay.
The stock has been consolidating for a very long time. And, since October, we've seen a trading range and, it's moving out of that. So I think there is a lot more left in the stock. I think it's just the beginning of the story in steel. Steel is going to get a very good upside going ahead. Believe that the cycle is turning, and Tata Steel is a top pick there.
Okay, well, we're talking about companies and the NDTV profit impact as well, and as well as in some cases just the news impact that is coming in. Now, point is Sigachi Industries, which has announced that the fire accident in the Telangana unit, which resulted in a loss of 40 employees while leaving 33 injured, and it's had an impact on the stock. Let's hear the details about this. Uma?
So in the first official statement that Sigachi Industries has released, it's a communication to the Bombay Stock Exchange and the National Stock Exchange, where of course the company is listed. They have informed saying that after the accident, 40 team members, they say, have died in this particular accident, and 33 people are injured and are in hospital. They have also committed to paying 1 crore rupees to the families of each of the people who has died in this accident. They have also clarified that certain media reports had suggested that there was a reactor explosion, and that reactor explosion was not the cause of the accident, and they have said that the plant shall remain closed for approximately 90 days. One clarification here, the district administration, I've just spoken to the collector of Sangareddy, Pravinya, and she has clarified that the official figure is still 38, and she said till last night it was 36 deaths, and this morning one body has been recovered and one person has succumbed in hospital, and therefore the number of deaths is 38 as far as the government records are concerned. One other thing, the Chief Minister, when he visited the plant on Tuesday, he had a meeting with the company officials, and they had been quite upset with the fact that the top management of the company was not present there. They were informed that they had come there on Monday and that they were not able to be present on Tuesday, but the state government industry ministers as well as the Chief Minister said that they should have been present as responsible people. And the second thing that they had asked was a breakup of how many were skilled workers and how many were unskilled workers, because very obviously the maximum number of deaths are of people from outside the state, whether it's Andhra Pradesh, Bihar, Karnataka, Odisha, West Bengal, all those states is where people have come in from to work as it would seem unskilled labor in a unit where skilled labor should be employed is the opinion that has been expressed by the Labour Minister, Mr. Vivek, as well. The second aspect of it, of course, will relate to more measures that the government has said they will be inspecting all such, not just the high-risk units or similar chemical pharma units, but also the medium risk and low risk as well. And to bring in more protocols, they have also established now a state disaster management authority, which will now also have to listen to the guidelines that will be put forth by a 5-member probe committee that's been put in place by the Chief Minister.
Okay, so that's of course the take coming in from Uma Sudhir from Hyderabad on Sigachi Industries. Of course, very unfortunate incident, and the stock obviously under pressure, but that's probably the least of the concern with regard to that story. Let's go across. Vineet, we've seen a 100 basis point rate cut now. Our NB, and we've seen a decent rally within financials as well, right? Where is it that you are seeing value at this point? Is it NBFCs? Is it larger private banks? Is it PSU banks? Is it small private sector banks? Where is it that you're seeing value?
So I'm seeing the value in microfinance stocks, Credit Grameen, Ujjivan Finance, and followed that by NBFC, followed by PSBs, and then the private banks. That is the pecking order. Special mention I would like to make is of DCB Bank. Their body language is very strong. They're looking to grow 20% at least over the next couple of years. And we're going to see some expansion in NIM also going ahead. So that stock looks to be a cherry pick among the mid-sized banks as such.
Okay, I'm just wondering what you're making of IndusInd. Note today, which Goldman Sachs note actually, which shows a lot of worry about IndusInd Bank. But the fact is that this is the point at which you will know who the new management is, whose names will be with the RBI. a lot of reports doing the round about who is going to be the next person. Vineet, is this the time to build a position in IndusInd Bank if there's any interest at all?
I think definitely it's a contra play.
Yeah.
And should be bought into aggressively because, see, the organization has been there for a very, very long time, almost for 30, 35 plus years. And you have a RBI which is very watchful, and the kind of frauds that have been detected did not really go beyond 1 year of profits. So, I think if you discount 1 year, recovery process will obviously start. And of course, that is going to be back-ended. But I'm seeing once the new management is in place, we will see the bank get back to its growth trajectory. And the valuations at 0.6, 0.7 times book is absolutely PSU 2019 stress case valuations. Doesn't get worse than that.
Exactly.
And I don't think that the environment is as bad as then.
Exactly. Is it pitched for a contra play because it's too big to fail? The issues are more about not even regulatory issues. There were some issues which is not a large part of the balance sheet, and there's going to be a new captain on the ship. Just IndusInd Bank, Kush, and BTST ideas.
Sure. IndusInd Bank, yes, definitely, something that should be looked into. Ever since it made that low near the 650 mark and has been rising, there is a rising trend line support that has come in, and also a bit of a resistance near the 870, 875 zone, making an ascending triangle formation, which suggests that if you get a close or two above the 875 mark, then the stock could actually start moving higher. So yes, the risk reward ratio extremely favorable. So keep a stop loss near the 835 zone, and you could create a long position in IndusInd Bank. As far as the BTST idea goes, it's in Canfin Homes. Good move on the stock today. Volumes also on the upside. There were 5 sessions of consolidation, just prior to today, and now the stock has broken out of that. Momentum indicators also pointing north. So for targets of 825, 840 with a stop loss around the 795 mark, you could consider a long trade on Canfin.
Okay, now the other one which is in focus today is Tata Communications, and Macquarie has in fact initiated coverage with a bullish note, outperform rating, 2300 being the target price. So despite the 5% uptick today, you still have plenty of room to play this. Puneet's here giving us all of the details with regard to that one. Puneet.
Well, thank you for that. Definitely a huge target price, 2,300 rupees per share. And the key aspect of the note is that Macquarie is anticipating or estimating Tata Communication to double its revenue in the next 3 years. They've gone on to say that in a bull case scenario that will be the case, and said that the company is enabling digital transformation for enterprises in the country. They've also gone on to say that the Tata Communication is leveraging one of the largest world's largest digital pipeline networks today, and is adding enterprise business as one of the key growth verticals going forward. They've also mentioned that they see an optionality in Tatacom's growing digital services business, where the company generally is in the leader quadrant, so could see some growth prospects, and they're anticipating the company's digital connectivity to have and become essentially an enterprise digital partner for these enterprises. So it's revolving around the company's growth prospects in the enterprise business, and that's the bullish momentum coming from Macquarie on Tata Communications.
Okay, so Macquarie on Tata Communications, very excited about that stock. Just before markets close, few stocks that I want to take you through very quickly, Vineet. Let's start with Tatacom. Are you sharing the enthusiasm that Macquarie has?
Tatacom, I don't track Tatacom since a while now, so will not be able to comment on that.
Okay, what about you, Kush? The stock has shown some movement today.
Yeah, on the daily setup, it's a little overheated, but the weekly setup is where it gets a little more exciting. So yes, on the upside, 1925, perhaps 2000 plus kind of levels also on the cards, given a breakout above the 1775, 1800 zone. So this is a good move on the weekly setup. Keep a stop loss near the 1700 mark if you consider a fresh trade on Tata Communications. At this juncture, yeah.
Fresh trade on Tata Communications. Have you seen any of the listings today, Vineet? And that question not for Kush, but for Vineet. HDB, Sambhav Steel. Did you find?
HDB, I think Bajaj Finance is still a much better pick. It's grown faster over a longer period of time, still continues to outbeat in terms of AUM growth. NIMs are very good. And HDB for a large consumer segment has been very, very disappointing in terms of growth. And valuations are also rich. So I think I will stay with Bajaj Finance and buy more. Why buy HDB?
Vineet, Bajaj at this point, valuations more expensive, of course, versus an HDB.
Yeah, but the NIMs are also better, right?
Sure. Point taken. Okay. What do you make of an Asian Paints at this point, Vineet? Would you completely stay away from the paint space?
Actually, if you analyze the entire market share game, Birlas have taken share from Asian Paints. The other two players are unaffected. And if you talk to users of the paint industry, people are saying that it's a better product than Asian Paints. No one is talking about the other two players. So clear-cut, the market share losses are with Asian Paints, and until we do not see any sign of change happening there, or they getting into an aggressive mode, we'll stay away from that stock.
Look at the recovery though that we've seen in Asian Paints today, and after this Competition Commission of India's prima facie order on them, you've still seen this sharp recovery. Kush, if you had to bet on, I wouldn't say Grasim because it's a larger play, not just the paints business in it, or if you want to look at it, that's fine. But Asian Paints, Axo, Grasim, what would you look at over here?
So if I did that, in this space, the top pick undoubtedly would be Berger Paints. Okay. You see the kind of moves and the recovery that it's made. Even if you look at the fall that it had from September along with the rest of the market, this is the first one to recover almost about 70-80% of the lost ground. 78.6% retracement. Resistance was acting on it for the last 4 weeks. This week it's taken that out. Won't be surprised to see this one regain the entire loss and cross that 625 threshold way before the others recover that loss that started in September 24. But that said, Asian Paints from a positional standpoint is starting to look attractive because the volumes in the last 3 weeks have picked up. It's holding that 2200 low that it had made, rebounding from there at least 3 to 4 times. So we know the kind of fall that it's had. So if you're looking for a positional bet 12 to 18 months out, favorable risk-reward ratio, then yes, Asian Paints is something that also you can consider, but purely from a momentum play, Berger Paints is a hands-down winner.
Okay, Vineet, any of the value retailers on your list with this whole play with regard to monsoon, rural recovery, V-Mart, V2, Vishal? There's just so many players. Of course, they're expensive, but they offer very, very strong growth tailwind.
B2 retail, the kind of positive market commentary that they've given, and they're upending their store count growth every year to 100 stores. And they score at a price point which is $100 lower than what your Trent is doing with their cheaper brand. And I think V2 retail is very, very strong, and their business updates also getting stronger. So I'll be invested with that.
Okay, all right. Thank you, both of you gentlemen, for coming in, speaking with us. We'll let you go on that note. We're a minute and a half from close on the Nifty this Wednesday afternoon. And yes, we have seen a bit of pain on the Nifty at least today, but we've recovered from the lows. 1/3% lower on the Nifty 50 index. The Bank Nifty too, maybe a wee bit, but maybe no recovery at all, almost. Let's pull up the Nifty 50, in fact, intraday and see how that recovery has played out. There's been a bit of a recovery from the day's low. The Bank Nifty, though, I'm curious to know. I don't think there's been much of a recovery, honestly, on the Bank Nifty. There you go, relatively just pretty flat in that sense from that lowest point. Let's look at the heat map on the Nifty as well. And what you'll see is some of the heavyweights languishing at the bottom. HDFC Life has now slipped 2.6% lower. IndusInd also down by just about that. Bajaj Finserv is the other one. Bajaj Finance 1.5% down, and then HDFC Bank also down 1.3 odd %. It's a day when lenders are really suffering today, and so are the financials, even an HDFC Life for that matter. L&T is lower, and BEL, even among the defense counters, is seeing some bit of pressure. In fact, the Nifty defense also seeing some bit of pressure, despite that one or two stocks doing fairly well for themselves within that defense pack, including Aparis Defense, who spoke with NDTV Profit. Let's talk about the ones which are the winners today. Clear winners are the metal counters. Tata Steel, JSW Steel, leading that rally in metals on an otherwise weak day in markets. Asian Paints is the other one, 2.5% higher on a day like this. Not sure too many people would have anticipated that. Maruti 1.5% higher as well. Auto sales coming through, and now that that's completely digested, we're seeing that stock perked up in trade, and Trent again seeing green second time this week. So that's how it's played out, at least on the index. Kotak Mahindra Bank is the other one, and SBI is the other one, which are also seeing some pressure. And on a day like that, you would typically see pressure on indices. Let's pull up the advanced decline on the, there you go, that's the advanced decline on the NSE, and you're seeing pressure with regard to the breadth here as well. 3:2 with regard to the declines outstripping advances. The Nifty mid-cap index though seeing a solid recovery from the bottom. That's a very, very healthy recovery that we've seen on the mid-cap index. The small-cap index a wee bit in terms of the recovery that we've seen there. Let's talk about sectors now. Let's pull that one up, and we'll see metals right at the top, very likely 1.5% on metals. Consumer durables also have done fairly well for themselves, 1% higher on consumer durables. What we're seeing in terms of pain, realty down 1.5%. The Fin Nifty is down 1%, no surprise there. The PSU banking index and the banking index follow suit with around 0.8% lower in terms of the move that we've seen today. IT flat, no complaints with regard to auto either. Pharma too, up around 1/3% thereabouts. Let's look at the BSE 500 top gainers, top losers. Those are some names for you. A Maharashtra scooter sitting right up there on top, 6.5% higher on a Maharashtra scooters. That's some serious gains on a day like this. Tata Communications is the other one on the back of that Macquarie report. We spoke about that. But outside of that, you're seeing Narayan Health seeing some pressure. RBL Bank, we did speak about that as well, and there's plenty of news around that. V-Mart had its quarterly update, which came out not too impressive, down 4% in trade today as well, and Brigade within the realty pack seeing 3.5% lower. Let's look at Qs now. There you go. So that's probably one of the global cues that we'll have to look out for, but frankly, no major impact on India. That's the one dividend adjustment that we need to factor in for tomorrow. And that's all, in fact, that we have in terms of cues to watch out for. Completely out of time on this edition of India Market Close. From Tamanna, Neeraj, myself, everyone who puts the show together, thanks so much for watching. But stay with us on the other side if you want to know everything that's happened in markets today with Market Express. Stay tuned. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims?
Hello and welcome viewers, you're watching Market Express and I'm your host Himakshi Bahuguna. Now let's get straight into the show viewers. So lackluster day of trade on the Lal Street. Nifty ends near 25,450 while the Sensex slumped over 300 points. Most sectors ended in the red, with Realty, Finance and PSU Bank being the top laggards. Meanwhile, Pharma, Metal and Auto led the gains, ending the day in the green. Now in the energy news, oil marketing companies are set to receive LPG compensation with 100% certainty. According to Petroleum Minister Hardeep Singh Puri, despite soaring international prices, LPG cylinder costs for consumers have remained low under the PM Ujjwala Yojana. Now this led to under-recoveries of 40,300 crore rupees for OMCs in FY25 due to the LPG subsidy. Now the assured compensation aims to ease financial strain on companies like IOCL, BPCL and HPCL, supporting their efforts to maintain affordable fuel access for millions. Paris Defence has secured a significant export deal worth 22 crore rupees with France's Cerber. Now, agreement involves supply of 30 Chimera 200 anti-drone systems, enhancing Paris Defence's presence in the global defense market. Now, this deal not only boosts the company's export potential, but also showcases its advanced technology in the counter-drone solutions. Adani Ports continue to demonstrate robust growth in its latest performance figures. In June, cargo volume surged 12% year-on-year to 41.3 million metric tons, while container volume jumped 15%. For the first quarter of fiscal 2026, cargo volumes actually rose 11%, reaching 120.6 million metric tons. On the logistics front, rail volumes RAIL volumes also showed strong momentum, with June volumes up 14% to over 62,000 TEUs and a 15% increase in the first quarter, totaling nearly 180,000 TEUs. Bajaj Hindustan has tendered part of its stake in Lakshmi Gayatri Power and Coal Limited, or LPGCL, through the company's share buyback offer. Through this transaction, Bajaj Hindustan received proceeds of 631 crore rupees. The funds from the buyback have been utilized to clear overdue optionally convertible debentures, strengthening the company's financial position. Dreamfolk Services is facing a setback following the closure of select programs with Axis Bank and ICICI Bank effective July 1st. The termination of these partnerships may have a material impact on the company's business. However, Dreamfolk has stated that it is actively planning measures to mitigate this impact. Importantly, existing contracts with these banks remain valid, providing some stability as the company navigates this challenge. Seagull India subsidiary Seagull Northern Ayodhya Bypass Private Limited has won a major order worth 1,199 crore rupees from the National Highways Authority of India. Now, the contract involves construction of a 4 to 6 lane Northern Ayodhya bypass spanning 35.4 kilometers in Uttar Pradesh. This project will be executed under the hybrid annuity mode as part of the National Highways Development Project Phase 7. Now, the appointed date for commencement is July 9th. RITES has secured a significant order worth $3.6 million or approximately 31 crore rupees from an African rail company. Now, the order involves the supply of 2 fully overhauled ALCO locomotives which are set to be deployed across Zimbabwe, Mozambique and Botswana. Now, the company has been given a 9-month timeline to execute this order. This deal actually highlights RITE's growing footprint in the African rail sector and underscores its expertise in the locomotive refurbishment and supply. Trouble brews for Asian Paints as the Competition Commission of India finds prima facie evidence of violations under the Competition Act, including unfair trade practices and denial of market access following a complaint from the Grasim's Birla Opus Paints division. Now, the CCI has ordered a 90-day investigation into this. Asian Paints says that it's reviewing the order and will cooperate fully with pursuing legal recourse. Investec maintains a sell rating with a 2,080 rupee target price, noting that a ruling favouring Grasim could lower entry barriers in the paints market. Shares have fallen nearly 2% today in trade. Lupin has secured US FDA approval for its abbreviated new drug application for loteprednol etabonate ophthalmic gel. Now, this is a generic equivalent to Bausch & Lomb's Lotmax SM, as the exclusive first-to-file applicant, Lupin, is eligible for 180 days of generic exclusivity. The gel is used to treat postoperative inflammation and pain following ocular surgery. With estimated US sales of $29 million annually, this approval strengthens Lupin's growing presence in the US market. Shares rose 1.56% today in trade. Jubilant Ingrevia stands to gain from the EU's provisional anti-dumping duties of 95.4% to 120.8% on Chinese vitamin B4. The duties set to be finalized in months open a window for Jubilant to capture market share in Europe's choline chloride market. Now, this could boost utilization and profitability in its vitamin 4 segment. Higher realizations could also be on the cards. The nutrition segment accounting for 20% of FY25 EBITDA. Shares climbed 2% today in trade. NMDC reported June iron ore sales of 3.5 million tons, down 4% from 3.73 million tons year on year. Meanwhile, production rose 5.9% to 3.57 million tons. The company slashed fines prices by 9% to 4,850 per ton and lump prices by 10% to 5,700 rupee per ton. On to the brokerage verdict, Citi maintains a sell rating, citing high valuations with the stock trading at 5.8 times EV on EBITDA, above peers 5 times average. Citi maintains a sell rating on sale, raising its target price to 115 from 95 rupees. The brokerage expects sales EBITDA per ton to peak in Q1 but anticipates a further correction. The brokerage says that the correction will be due to softening steel prices driven by demand-supply imbalances. Citi also sees limited upside for sale despite its Q4 sales volume of 5.3 million tons and a stable EBITDA margin of 11.6%. India Pesticides has commissioned an expansion of its formulation plant, boosting capacity by 3,500 metric tons per annum to a total of 10,000 MTPA effective June 30th. Now, the 2.8 crore rupee project funded through internal accruals. This move strengthens the company's position among the top global manufacturers of fungicides and herbicides with exports to over 20 countries. Now, this is also expected to drive revenue growth and rising demand. Goldman Sachs has downgraded SBI Cards to neutral from buy, maintaining a target price of 1,006 rupees. The brokerage cites a balanced risk-reward after a sharp valuation re-rating, with the stock trading at a premium. Focus shifts to near-term credit costs and growth, with the EPS growth expected to slow, leading to a 9.5% and 7.8% cut in FY26 and FY27 EPS estimates. Goldman also anticipates gradual improvement in the net interest margins, but slower gains in operating leverage, impacting profitability. VIDA, Hero MotoCorp's electric mobility brand, has launched the new VX2 electric scooter, with prices starting at 59,490 rupees, which is the ex-showroom price. Now, the VX2 is available in two variants. As an added benefit, if battery performance drops below 70%, VIDA will replace it free of charge during the subscription period. Now, the VX2 rides on 12-inch wheels, featuring a sleek, flowing design with a familiar VIDA silhouette, and comes in 7 contemporary color options. Ola Electric reported nearly 60,000 vehicle registrations in Q1 of FY26, with Vahan data showing a 9% month-on-month growth in June. Reports suggest a sustained demand recovery in Q2, driven by the company's recalibrated sustainable growth strategy. Ola is projected to achieve a 25% quarter-on-quarter revenue growth, aiming to meet its 800 to 850 crore rupees guidance for the quarter. Now, this follows a four-fold network expansion to 4,000 stores, boosting volumes and margins despite past service challenges. Shares rose 1.8% today. Inox Wind was in focus after Motilal Oswal initiated coverage with a buy rating and a target price of 210 rupees, implying a 21% upside. The brokerage highlights Inox Wind's robust 3.2 gigawatt order book, ensuring revenue visibility for 2 years, and its subsidiaries' 5.1 gigawatt O&M portfolio. With India's wind capacity set to double to 100 gigawatts by 2030, Motilal Oswal expects a 38% EBITDA CAGR for Inox Wind through FY28, driven by strong execution and policy tailwinds. The stock trades at a 28% discount to Pierce's Lawn Energy. Some luxury and sin goods like cigarettes, fizzy drinks, and high-end cars may soon get more expensive. The government is considering a plan to introduce a new health and green cess to replace the current compensation cess, which is set to end by March 2026. So right now, these items attract the highest GST rate of 28% along with an extra cess. And this new move could actually keep that additional tax in place. AU Small Finance Bank strengthens its leadership by appointing 2 new independent directors, Nand Kumar Sarvade and Jagjit Mangal Prasad. So Sarvade brings deep expertise in cybersecurity and fraud risk, while Prasad adds decades of HR leadership experience. The appointments come as the bank undertakes broader organizational changes. So AUSFB is also sharpening its focus on expanding presence in Mumbai, signaling strategic growth ambitions in India's financial capital. Shares of HDFC Bank backed HDB Financial Services made a strong debut on the bourses, listing at 835 rupees on NSE and BSE, a premium of 12.84% from its IPO price of 740 rupees. Now, the IPO, valued at 12,500 crore rupees, was open for subscription from June 25th to June 27th. In terms of overall issue size, HDB Financial's IPO stands out as the 4th largest public offering in India's history, trailing only behind the mega listings of Hyundai, LIC and Paytm. Sambhav Steel Tubes made a strong debut on the stock market today, listing at a 34% premium over its IPO price of 82 rupees, with shares opening at 110 rupees on the NSE and 110.10 on the BSE. So this impressive listing gains translate to a profit of 28 rupee per share
for investors who subscribed at the IPO price. So the IPO, which was open from June 25th to 27th, was subscribed nearly 29 times overall, with strong demand from non-institutional investors, qualified institutional buyers, and retail investors. So the company, a manufacturer of electric resistance welded steel pipes and structural tubes based in Chhattisgarh, raised 540 crore rupees through this issue, including a fresh issue of 440 crore rupees and an offer for sale by promoters worth 100 crore rupees. Goldman Sachs maintains a neutral rating on KPIT Tech while trimming its target price to 1,230 rupees from 1,280 rupees. So the brokerage expects a modest start to FY26 with growth likely to pick up in the second half. It notes that automotive ER&D spending remains muted amid global uncertainties. Deal closures are subdued and no major wins are expected in the near term. The firm cites a cautious outlook due to the ongoing tariff environment. Keystone Realtors, operating under the Rustomjee brand, is in the spotlight after securing 2 significant redevelopment projects in Mumbai. The company was selected by 8 housing societies in Andheri West for a cluster redevelopment spanning 4.75 acres valued at 3,000 crore rupees. Development agreements are already signed with 5 societies and with letters of intent from the remaining 3. Additionally, Keystone received a letter of acceptance for the redevelopment of GTB Nagar in Sion with MHADA. This project targets a gross development value of 4,521 crore rupees across 11.19 acres, benefiting over 1,400 families. So following these announcements, the Keystone Realtors shares surged 10% today. Macquarie initiates coverage on Tata Communications with an outperform rating and a target price of 2,300 rupees. The brokerage see a bull case scenario where the stock could double over the next 3 years. So it highlights Tata Comm's shift from a passive connectivity provider to a digital transformation partner for enterprises. So the company is leveraging one of the world's largest digital pipeline networks and expanding its digital services portfolio. Macquarie also sees strong optionality in this transition. The State Bank of India has declared the loan account of Reliance Communications as fraud and is preparing to report the company's former director, Anil Ambani, to the Reserve Bank of India. In a letter dated June 23 and received by Reliance Communications on June 30th, SBI said that its fraud identification committee found irregularities, including possible fund diversion through related companies like Reliance Telecom and others. So the decision came after reviewing show cause notices and forensic audit findings. Now on to some economic data from the US. Available positions increased by 374,000 to 7.77 million, according to Bureau of Labor Statistics. Now, US job openings unexpectedly rise to highest since November. This is a continued strength and resilience of the labor market. Economic activity in manufacturing sector contracted in June for the 4th consecutive month to 49, although it did beat estimates of 48.8. So this is also an increase from level of 48.5 seen in May. June data comes following a 2-month expansion preceded by 26 straight months of contraction. A manufacturing PMI above 42.3% over a period of time generally indicates an expansion of the overall economy. Prime Minister Narendra Modi has left on a week-long diplomatic visit to 5 countries, including Brazil, where he will attend the BRICS summit. Before departing, the Prime Minister said India sees BRICS as a key platform to promote peace, fairness and a balanced world order. PM Modi will first visit Ghana, followed by stops in Trinidad and Tobago, Argentina, Brazil and Namibia. At the first Quad Foreign Ministers meeting since Operation Sindoor, External Affairs Minister S. Jaishankar reaffirmed India's firm stance on terrorism. Speaking in Washington, D.C., he said that India has the full right to protect its citizens from terror threats and will exercise that right when needed. He also called on Quad partners to adopt a zero-tolerance approach to terrorism. Karnataka Chief Minister Siddaramaiah has put an end to speculation about a leadership change, stating that he will serve the full 5-year term. Addressing the media, he confidently asserted, "Yes, I will be the Chief Minister for 5 years. Do you have any doubt?" So this declaration follows similar reassurances from Congress General Secretary Randeep Surjewala. Meanwhile, Deputy Chief Minister D.K. Shivkumar also downplayed any immediate aspirations for the top post, emphasizing his focus on strengthening the party for 2028 elections. Karnataka Chief Minister Siddaramaiah has urged the centre to roll back the recent railway fare hike. So in a post on social media platform X, he said that hike is unfair and should be reversed immediately. He criticized the move, saying that it adds to the burden on daily wage workers, students, small traders and the common man who are already struggling with the rising prices. The Food and Drug Administration will also soon roll out a toll-free number for people to report complaints against online food delivery platforms. The announcement was made by FDA Minister Narhari Zirwal in the Legislative Council. He said inspections of platforms like Zomato, Swiggy and Zepto uncovered serious issues such as unhygienic conditions and expired food items stored in warehouses. So far, the FDA has issued 34 notices, suspended 1 license and ordered 5 outlets to shut down. The US Senate narrowly passed President Donald Trump's major tax and spending bill known as the One Big Beautiful Bill Act. So the vote ended in a 50-50 tie broken by Vice President J.D. Vance pushing the legislation through. So this flagship bill includes a $150 billion increase in military spending, funding for the president's mass deportation program, and a $4.5 trillion extension of Trump's initial tax cuts. In a post on Truth Social, US President Donald Trump said that Israel has agreed for a ceasefire in Gaza. He said that Israel has agreed to the necessary conditions to finalize a 60-day ceasefire, during which time he will work with all the parties to end the war. He said that he hopes that Hamas takes the deal because it will only get worse from here. Zohran Mamdani has secured the Democratic mayoral primary in New York City, achieving a stunning upset victory over former Governor Andrew Cuomo. A new vote count confirmed his win, paving his way to the general election. Media reports called the race after ranked choice. Voting results showed Mamdani defeating Cuomo by 12 percentage points. The Dalai Lama, Tibet's exiled spiritual leader, confirmed today that he will have a successor, reassuring Buddhist followers and global supporters that the 600-year-old institution will continue. This is a landmark decision for Tibetans who feared a future without a leader and for those who see him as a symbol of non-violence and the struggle for Tibetan identity under Chinese rule. Meanwhile, China stated that the reincarnation must be approved by the central government. 14-year-old Divyanshi Bhaumik has created history at the Asian Youth Table Tennis Championships in Tashkent. So she became the first Indian in 36 years to win the U15 girls single title, defeating her Chinese opponent in a tees final. So in a remarkable run, Divyanshi beat 3 Chinese players, something never done before by an Indian at this level. With this gold medal, she has also secured a spot at the upcoming World Youth Championships. Well, with that, viewers, it's a wrap on Market Express, but please stay tuned to NDTV Profit as Sanjana Chauhan joins in with Profit 360 on the other side of the break.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
Markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Nifty closes below the 25,500 mark, ends lower for the day. Shriram Finance and HDFC Life Insurance are the top losers in Nifty. Nifty Realty falls 1.4% as the top losing sector for the day. The government permits ride-hailing services like Ola and Uber to set their fares at up to double the base rate during peak times, an increase from the previous limit of 1.5 times, and not to go below 50% during off-peak hours as part of the newly introduced motor vehicle aggregator guidelines. Sources tell NDTV Profit GST rates on cigarettes, carbonated drinks and high-end cars is likely to rise. Sources telling NDTV Profit exclusively that the government is assessing the re-employment of 2,500 to 3,000 MTNL employees affected by the transition into BSNL. This after MTNL unions write to the government demanding clarity on the future of these employees. The State Bank of India decides to classify the loan account of Reliance Communications Limited as fraud, a move that dates back to transactions from August 2016. The bank will also report the name of Anil Ambani, erstwhile director to the RBI, in line with regulatory requirements for key management personnel involved in such accounts. Government sources say India has pitched for a social security agreement as part of the ongoing trade negotiations with the US. JobSpeak data for June shows a sharp pickup in hiring across core service sectors, with IT hiring turning positive after a muted spell, with strong demand emerging from Tier 2 cities. The toll in the explosion at the Sigachi Industries pharma plant in Sangareddy district of Telangana rises to 40 as the state government will engage with the management of the firm to ensure the compensation of 1 crore is paid to the kin of those who died in the horrific accident. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Along the next half an hour, we're going to bring you the latest in markets as well as national and international news. So let's dive right into it and have a look at how the markets fared today. The Nifty closed below the crucial 25,500 mark, ending the day on a weaker note as selling pressure intensified. Shriram Finance and HDFC Life Insurance emerged as the biggest laggards, dragging the index down. The realty sector was the hardest hit, falling with 1.4%, with Brigade Enterprises and Phoenix Mills leading the decline, extending the sector's losing streak to 5 consecutive days. But for a more detailed roundup, I'm going to quickly go over to my colleague Harsh.
Well, we've closed below 25,500, but it's not been a very bad day on the Nifty. We've recovered a wee bit from the day's low. That's the likely positive we can take out of this. And we've closed above 25,400. And those are the couple of positives to take away. In terms of what pressured the index, well, it's the heavyweights essentially. and the financials. Let me talk about the heavyweights first. And HDFC was down 1.4% nearly, and there was pressure on Reliance right through the day, and therefore those heavyweights pressured the index. It's also ICICI, Kotak, all of those which were down nearly 1% each, and therefore you saw that pressure as well. L&T was the other laggard, and that 1-2 pressured indices, and the contributors will come up on your screen and you'll see that impact from some of those names. And in terms of the gainers as well, it was the metal names which actually led. Tata Steel, JSW Steel were the key leaders in trade today. In fact, Tata Steel up nearly 4% in trade, so very strong move. But they aren't necessarily heavyweights, and therefore we didn't see much of a move in markets due to that, due to those stocks really moving. So again, something to keep in mind. It's some of the heavyweights which have pushed the index lower. You're also seeing an HDFC Life, which is a top loser in trade. IndusInd Bank was the other one which saw some pressure. So those were some of the bigger losers. Bajaj Twins, both FinServ and Finance, were also on the losing end of the spectrum today. Now let's talk about the broader markets. Now the breadth was unfavorable at the broader end. We saw some bit of recovery, especially within the mid-cap space late, right in the last hour or so of trade, and the Nifty mid-cap from the lows bounced back quite well to close absolutely flat in trade. So something to keep in mind, that the broader end saw a bit of a recovery. Even the small cap index saw a bit of a recovery, but much lower than the mid cap. The mid cap recovery was especially stood out for me. In terms of sectors, we did speak about a couple of sectors, but consumer durables, metals were the key winners in trade today. Realty was the key loser. Well, there were plenty of sectors which did really nothing much. Pharma, auto, IT were some of the sectors where, you know, just about flat to maybe 1/3% of gains that we saw today. But on a day like this, that's not a bad day to take home some bit of gains at least, and we saw some of that in trade today. So that's how it essentially played out. We've still got a couple of trading days ahead of us. Need to wait and watch how this week closes out.
Absolutely, Harsh. Thanks so much for that. And moving on to our top focus this evening, the government has unveiled the new Motor Vehicle Aggregator Guidelines 2025, ushering in significant changes for ride-hailing platforms like Ola, Uber and Rapido. Now, under the updated rules, cab aggregators can now charge up to twice the base fare during peak hours. That's an increase from the previous 1.5x cap. While fares during off-peak times can drop to 50% below the base rate. Let's take a look at this report filed by my colleague Rishabh.
The Motor Vehicle Aggregator Guidelines of 2025, rolled out by the Ministry of Road Transport and Highways, allow cab aggregators to charge up to twice the base fare when demand spikes. This is up from the previous cap of 1.5 times. But there's a silver lining as well. Fares can dip to 50% of the base rate during quieter hours. So a ride with 100 rupee base fare could cost anywhere from 50 to 200 rupees depending on the clock. Plus, private motorcycles can now double as taxis, aiming to cut traffic and pollution.
कई बार ऐसा होता है कि एक ट्रिप हमारे पास बचता रहता है, अब उनके पास कैसा इमरजेंसी है मुझे नहीं पता, लेकिन मुझे वो रेट में लगता है कि मेरा नुकसान है तो हम वो ट्रिप एक्सेप्ट नहीं करते हैं. और रेट जायज़ होना चाहिए कि जिससे ड्राइवर को भी 2 पैसा बचे और जो है मतलब सवारी को भी ना लगे कि मुझे ज़्यादा मेरे से लिया जा रहा है.
Safety is getting a boost too, with a mandatory 5 lakh rupee insurance for passengers and 10 lakh term insurance for drivers. This framework also clears way for formalization of the gig economy. States have 3 months to roll out these rules, which also slap a 10% cancellation fee capped at 100 rupees for passengers bailing without good reason.
बाइक से ओला वालों का काम सबसे ज़्यादा कम हो गया है. ओला कुल मिला के ठीक भी देता है, ऊबर ज़्यादा ही डाउन करता है, तो उससे दिक्कत भी होती है. ओला ऊबर वालों का ही भला कर पाते हैं, हम अपना पेट बहुत मुश्किल से पाल रहे हैं.
इंश्योरेंस वगैरह तो हो जाए तो बहुत ही अच्छी बात है. ये तो जो है मतलब कहाँ ड्राइवरों को कुछ बच पाता है जो अपने लिए कुछ सेव कर पाए और इंश्योरेंस करवा पाए?
You heard from the drivers, while they are very much positive about some of the newer rules like insurance, like health insurance, like life insurance, as well as the training sessions that are a part of these new motor vehicle guidelines. What they are still very, very optimistic about and hopeful about is the fact that they want better fares. They want a better livelihood for themselves, and that is something that these guidelines don't talk about. They only talk about surge pricing for these aggregators, but how about the contributions that now some of these drivers will now be able to get as part of the higher fares that these aggregators will now be able to charge? This is Rishabh Bhatnagar reporting from New Delhi with camera person Surat Singh.
And now let me quickly go across to our guest joining me this evening, Sachin Taparia, Chairman and Founder of Local Circles. Good evening and thank you so much. Welcome to NDTV Profit once again. I'm going to cut right to the chase. How are you seeing this new motor vehicle aggregator guidelines impacting everyday commuters, especially in terms of affordability and accessibility? Sachin, I know that you have all of the data and you're ear to the ground.
So there were three major issues, Sanjana, that came out in our last report. The first one was drivers cancelling rides and without any penalties, without any disincentives. And the consumer basically, left out dry, waiting for another taxi or trying to get to the airport. Very, very inconvenient. The second issue was surge pricing, excessive surge pricing. And the frequency of that surge pricing. And then, the third issue really was around, behavior and safety and other issues, basically. So we've been escalating these issues to the government since 2018-19. They formed the original guidelines with the 1.5 times surge. Now they have expanded it to twice. The issue that we see here with the surge pricing is that now, a 750 rupee airfare from, let's say, South Delhi to the airport will become a 1500 airfare during peak times. And that is, a concern to the common consumer because the predictability, is reduced further as to what will be the final fare. The certainty of the fare has reduced because they could charge anywhere, what they feel like pretty much. With the 150%, at least a 750 fare would go up to 1,050, but not 1,500. So I think it definitely benefits the aggregators, not the consumer. On the cancellation front, I think there is some good news where they have introduced a 10% cancellation penalty for the driver, so they'll cancel less. And what we found through our studies is that many times, whether if the driver did not want to, or they didn't want to go to a particular destination, they'd cancel, or if the payment mode was digital, then also we see drivers canceling because they want cash. It leads to instant cash flow for them versus, getting paid a week later or a month later. So, all in all, it's a mixed bag, essentially, from a consumer standpoint. And again, the proof of the pudding will really lie in the implementation because they can come up with these guidelines, but if the states do not implement it, as we are seeing with the Motor Vehicle Act, as well as with these guidelines in the past, there's little that's going to change on the ground. So I think we'll have to wait and watch and see how quickly states adopt it and start implementing them.
Sure, Sachin. Local Circles has been instrumental in capturing citizen feedback on urban mobility. What would you say are the top concerns or the expectations you're hearing from your community regarding these new guidelines?
So, 6 in 10 consumers feel that there are a lot of unfair trade practices that take place with taxi aggregators. And they, of course, there is the surge pricing aspect, there is the driver canceling, and instead of, the drivers seeing a penalty, you see that the consumer ends up paying for it. Because the driver calls them and says, I cannot go there, can you cancel the ride? You cancel and you see a charge from the taxi aggregators. So again, while people feel that the cancellation penalty will help, but it will only help if it is actually implemented. So there is a lot of skepticism whether these guidelines will be implemented as it is by the states, or will it continue to be the same, which has been the case since 2019, 2020, when these first guidelines came about, that not much changed on the ground and the cancellations continued, the unfair trade practices continued. There's a lot of dark patterns that consumers report about, taxi aggregator platforms. So I think we'll have to see both the ministries, the Ministry of Road Transport, which came up with these guidelines, as well as the CCPA, the Ministry of Consumer Affairs, playing an active role to ensure that these unfair trade practices are minimized. There's more predictability, there is more availability, and the cancellation works both ways, for the consumer as well as for the driver.
Okay, Sachin, and last, do you believe that this increased flexibility and surge and off-peak pricing will ultimately benefit consumers? I know that you've been saying that the proof really lies in the pudding of execution and implementation and really the state's timely adoption to it, because I think we've also had a discussion in the past regarding dark patterns with these platforms, but we're still seeing it continue to happen. Do you think it will benefit consumers, or could it lead to a higher average fare over time?
It will definitely lead to a higher average fare over time, Sanjana. Where I think it will help is giving a bit more predictability and certainty to the consumer if the penalty clause is effectively implemented by the platforms, where the driver, before canceling, so right now, let's say if the cancellation rate is 30%, right? If that drops down to, 15%, I think consumers will have more certainty. So that's where I see, some benefit coming in. But again, it will have to be implemented effectively by the platforms and by the states for it to actually, see the light of the day.
Right, Sachin Taparia, Chairman of Local Circles, as always giving us some very, very insightful and comprehensive data. Thanks so much for joining us and really simplifying this issue. One can only hope that this is a win-win for both the sides, whether it comes to these aggregators and, of course, the people that are riding in these taxis. Meanwhile, let's shift focus to what's happening between India and the United States. Time is running out for a crucial trade deal between India and America. With the tariff pause set to expire in just days, negotiators in Washington are in a frantic race against the clock. At stake is a massive $500 billion trade target, the livelihoods of thousands, and indeed the very momentum of India's export economy. India is standing firm, pushing on zero tariffs on its vital labor-intensive products. So let's think textiles, leather, and handicrafts, arguing that without this, the dream of doubling exports will remain just that. Meanwhile, the US is countering with a proposed 10% surcharge on top of existing duties, aggressively demanding wider access to Indian markets for its agricultural powerhouses like rice, dairy, poultry, and even GM soy. And hopes for this trade deal are dimming as India is standing firm on its red lines for agriculture and dairy. While New Delhi seeks concessions for its labor-intensive products, no relief appears likely on US tariffs for steel and auto components. Ajay Srivastav from Global Trade Research Initiative joins in with more on this.
The US already has an FTA with South Korea and Japan and Canada, but still Mr. Trump has imposed country-specific tariffs on them and renegotiating all these things. So any deal with the US is not a final deal. So whatever deal is there with India, with UK or any other country, they will need to be reviewed and most of them will cease to exist the moment Mr. Trump goes.
Meanwhile, India is making a significant push to safeguard the financial future of its citizens working abroad. The government is actively working to incorporate social security agreements into its free trade agreements. India has made a formal request to the US on this front. My colleague Rishabh joining in with more on this.
What we've learned is that India has pitched for social security agreement to be a part of the US bilateral trade agreement as well. This is what we've reliably confirmed as part of the ongoing trade negotiations that are currently underway in Washington. What we're also picking up is that the ball is now set to be in the US's court with regards to how they accept and how they finalize the terms of this. Remember, a social security agreement is something that we've already inked with the United Kingdom, it was inked in the form of something called the Double Contribution Convention Agreement. Apart from that, India already has social security agreements with about 22 nations. And so going ahead as well, India will be pitching to more and more countries. And this is something that the Labour Ministry has also urged the Commerce Ministry for, is the fact that we need more and more of these social security arrangements as part of the free trade agreements. Instead of the Labour Ministry going out there independently, they can easily be built into the free trade agreement negotiations with each of these countries. Remember, a social security agreement is something that basically avoids double taxation for employers. What this does is, with a lot of these Indian professionals going out every day, going out to other countries to work, what we're seeing is that usually what happens is that these workers are only able to contribute to the social security system or the pension system of the country that they've actually gone to, instead of depositing their money right here in India. A double contribution convention agreement would therefore nullify these double payments that a lot of these employees have to do, and then they'll have to pay in only one country, preferably India, where they won't lose out on any sort of deposits that they've made to these social security systems.
Right, Rishabh, thanks so much for that. We'll continue tracking the story and bring you the latest developments. Moving on to some breaking news coming in. The Banga family is reportedly planning to offload a $150 million stake in beauty and fashion giant Nykaa, with a block deal announcement that is expected later today. The transaction is likely to be priced at around 4% discount to Nykaa's current market value, signaling a significant move in the company's shareholding pattern. This is the big news that's coming in right now. Market watchers obviously awaiting the Banga family's next move as they prepare to offload a $150 million stake in Nykaa, with this block deal announcement coming in today. Moving on, luxury goods are set to become more expensive as the GST levied on them is expected to be hiked. These goods are taxed under the 28% slab and attract compensation cess. Sources told NDTV Profit that the compensation cess may be replaced by health and green cess. My colleague Shrimi Chaudhary brings us more on the items that are about to get expensive. But we also understand that the government is considering a three-tier structure. Please give us all of the details.
Yeah, sure, Sanjana. So, of course, ahead of the GST Council meeting, which is expected soon, a very important proposal, under consideration to introduce a new green and health cess on select items, particularly, on the luxury and sin goods, ranging from, tobacco products like cigarettes, carbonated drinks, as well as high-end automobiles. Now, clearly at present, it attracts these select items attracts 28% of GST and are also subject to compensation cess, the regime which set to expire by March 31st, 2026. Now, a group of ministers, state and center, are all deliberating on the future of compensation cess, meaning what will happen beyond this deadline. So a couple of options are actually on table which they are deliberating upon. One is that whether to subsume compensation levy in the GST, which could move up the effective rate of GST on these select items. The second option is, of course, to have a new cess in the form of health cess or green cess, or maybe both. So these options are, under consideration. And as you know, that compensation cess was introduced, to compensate the revenue shortfall by states when the GST regime was introduced, and all those the debts which the government has taken during the pandemic was expected to fully paid by January 2026. And in fact, the 40,000 crore which could remain, that will also distributed among state is what sense we are getting. But a formula of that, a strategy of that government will come out with soon in the next council meeting is what we are getting sense from sources. On the second point, on the rate rationalization, now this exercise has been going on for some time, and a GOM has proposed a three-tier structure. Now, GST 2.0 will see overhaul of the four-tier structure which it has, which is 5%, 12%, 18%, and 28%. So that is going to move to three-tier structure. probably the chances of removing the 12% from that bracket, and maybe some items could move to 5% bracket and some select item could move to the higher bracket, which is 18%. So nothing has been decided at this point of time. However, there are, pretty serious on the fact that this is now the time to kind of introduce and merge the new rate, rationalize the GST rates, keeping in mind that now GST is reaching 22 trillion lakh mark last year itself, last fiscal itself. And if you see the monthly average also, the GST collection is around 1.85 lakh crores. So making it a fit case for rate rationalization is the indication we are getting.
Right, Shrimi, thanks so much for that comprehensive, detailed understanding of the story. This is as luxury goods are set to become more expensive and attract more GST. Let me quickly go across now to my colleague Aishwarya, who's standing by. Aishwarya, we understand MTNL employees have staged protests over concerns about their re-employment following the proposed BSNL merger. So give us all the detailed insights on their demands and the ongoing developments. Aishwarya, over to you.
Well, two key developments here. First, what we're picking up from our sources is that MTNL employees, the government is assessing for them to be placed within the DOT, Department of Telecom, as well as the BSNL as well. Now, MTNL employees, there is a union and multiple unions, in fact, that have been formed over time since the transition of MTNL to BSNL has been talked about for a very long time. So these unions have about 2,500 to 3,000 employees that may be affected due to this transition. What they have done is written an official letter, a formal letter, to the Secretary of DOT, Neeraj Mittal, as well as the CMD of MTNL, and also the ministers of telecom, as well as MOS, have also been marked in this particular letter that they have written on the 6th of June. We did access this particular letter, which says that MTNL, the users, the unions have been kind of facing issues as far as employment is concerned. They have urged DOT to look into this matter as far as the HR related benefits are concerned. They have been they are alleging that they've not been getting those benefits so far, such as promotions, financial upgradations, that have not been given to them since this impact has been happening as far as MTNL is concerned. They're also doing a phased protest across different cities, Delhi as well as Mumbai, right from June up until the end of July as well. So this letter contains that. So these are the two key developments. First is, of course, these 3,000 employees that the government is looking at deploying between DOT as well as BSNL and other ministries. And second is that MTNL employees have written a letter and urged intervention from DOT on a very crucial basis at this point in time.
Right, Aishwarya, thanks so much for that update. Remains to be seen what's next for MTNL employees. We'll continue bringing you all those updates. That's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers. Hello and welcome. You're watching KYC. I'm Harsh Saita, and it's a great time, if at all, if you get to invest in a really good turnaround. And you know, just about any time is a great time to invest in a turnaround. And today's candidate is one of those. And we've started to see an uptick in the stock price. In fact, the stock is a 2.5 bagger in the last 3 years. And the stock we're going to talk about today is JM Financial. And the person we're going to speak to today is Digant Harya. He's obviously one of those who has written about JM Financial in a large fashion on his blog. And his blog was the key trigger on the stock moving as well, at least over the last couple of weeks. And the stock over the last couple of weeks has done very, very well for itself. So here's what I really want to know. JM Financial, in terms of a turnaround, they're exiting certain businesses. And they're exiting businesses in the lending space. When you exit businesses in the lending space, you will typically start to recognize credit losses. How much of that? How much of the credit loss has already been booked? What is the comfort on the current book and on recoveries? It's a larger book size in relative terms. Approximately 3,000 to 3,500 crore is the business that they are exiting. Okay. So how much of that can they garner in terms of recovery? How much will they be recognizing on their profit and loss account? The second one, how likely is the recovery on the wholesale as well as the ARC going to be at 4,000 crore? Because that's the value which Digant has ascribed as part of his valuation. And we will talk about this as part of the valuation metric in our metrics as well. How quickly will the recovery happen is the other piece. Timing of the recovery is crucial. The quicker the recovery happens, the better it is, the more the certainty, the more it's pushed, the worse it gets. What is the risk on the retail housing book? Because that book, they're going to continue to grow. In fact, they've guided that retail housing, they will double the book size by FY27 from the current book size of 2,800 crore. That's a large and tall ask. Can that also happen? And what's the risk like? What do they do with the balance book? They've said that they'll double it. And where to from there? What's the comfort with regard to asset quality on retail? That's all that I want to understand. Now, in terms of the merchant banking business, the whole point of doing lending is to try and leverage the balance sheet, all the cash flows coming into the balance sheet from the merchant banking business, and thereafter lend. Now that they're withdrawing to a large extent from lending, what does the merchant banking business do in terms of risk? Mind you, it's a cyclical business. We have seen that between September to maybe March, April, or even May of this year, we've hardly seen any IPOs. It automatically creates a drag in the business. Can that business continue to sustain in terms of growth, and what's the other lever that it will rely on in case of a slowdown in the merchant banking business? Where do they invest the cash coming in? They've also suggested that they will do payouts, buybacks, dividends, return money to shareholders in a big fashion. So is that what it will happen, or will they invest in a newer business? And therefore, given the multiple moving parts, how do valuations look and how do they stack up? All of this we'll try to break down with Digant Haria, who's the founder of Green Edge Wealth, I beg your pardon, and he will be joining us later today. Now let me quickly talk to you about the company first, try and give you some context on what JM Financial is all about. I'm going to start off with when it was incorporated way back in 1973. It was incorporated as an equity broking firm and was also doing investment banking. Nimesh Kampani saw a huge opportunity in Indian capital markets, bringing what foreign firms used to do in a domestic market, in domestic fashion. And that is what he wanted to really tap into back in 1973. And here's a broad glimpse of the journey. In 1980, it became the first company to introduce fully convertible debentures in Indian capital markets. Even I was surprised by the number of firsts that JM Financial has clocked over, I don't know, the last 40 years. Now let's talk about 1986. It engaged in the business of stock broking and securities back in 1986. It introduced equity warrants to the Indian capital markets between 89 and 94, listed on the Bombay, Ahmedabad and Delhi stock exchanges, introduced deep discount bonds to the Indian capital markets, managed 4 transactions in excess of 100 crore back in the day. That's a large amount, 1989 to 1994 we're talking about, which was unmatched back then in the Indian markets. It's the first private sector mutual fund, and it commenced operations in the 90s, in the early 90s. In 1999, it did a joint venture with Morgan Stanley, and this is in areas of investment banking and securities business. It later on went on to break up its JV, but we'll come to that. Between 2002 and 2006, here's what it did. Managed India's first IPO through book building. 3 firsts for it. First Indian dual tranche FCCB, which is foreign convertible bond issuance. First $1 billion IPO and first conditional IPO. Did all 3 of that. And thereafter launched a private equity fund between 2002 and 2006. This is. Let's talk about 2007 now. It's separated from the joint venture it had entered into with Morgan Stanley. Continued to lead the Indian investment banking financial services industry as a 100% Indian company, and launched a real estate fund as well, which it still continues to operate. Let's talk about 2008 to 2012. Commenced the ARC business, expanded operations in the fixed income business. Just try and understand how deep it is with regard to its capital markets foray. 2012 to 2017, it received a license for housing finance from the National Housing Bank and commenced the SME business. Also, between 2016 and 2018, it started its wholesale lending business, which is the one which has caused some bit of discomfort, or rather a large bit of discomfort to the financials over the last 5 years. And we'll pick and we'll try and understand all of those. Now let's talk about the business as of today. What does it do? Its business can be broken up into 4 parts. The first one is the capital market related businesses. Investment banking, broking, and both retail broking as well as institutional broking, wealth management as well as asset management. Core fee based business. Now let's talk about mortgage retail. This is a business which is around a 2800 crore AUM business. Currently does affordable home loans, small loan against property, and gives loans to educational institutions. The third is the mortgage wholesale business. Builder loans, large LAP, early stage financing and structured financing. This is where the problems lie at this point. All the NPAs currently sit here, or a large part of it. Then there is ARC, which is asset reconstruction. Distressed credit, which they purchase and then they try to conduct recoveries. Not happening at this point. Then they have SRs, which they have to liquidate. And then they also ventured into turnarounds. Those are the things which are really not working for it. This is where the company is actually losing money, and this is what they are likely going to avoid doing going forward. So let's understand the revenue breakup under each of these. And I've broken this up. Right, you have asset management and investment banking, which constitutes, if you just add up, 67% revenue FY25, 61% FY24, just about 60%, just maybe 53-55% in FY23. So it's gone up gradually as a percentage of the top line. Mortgage lending has actually come down. And look at the other segment. That may just be completely ignored, but broadly it is this which is contributing to the top line. Now, this is the revenue contribution, of course. And it's again important to understand because we've understood the businesses and now we've understood where the revenue is actually coming in from. So, now that we've understood the full business as a whole, let's talk a little bit about the metrics. I'm going to start off with the income statement, thereafter look at the balance sheet. We won't look at cash flow here. We will look at asset quality and return ratios. Thereafter, we'll look at street cred, shareholding, valuations, and we look at outlook. Outlook because it's a turnaround, mind you. So you want to look at what is it that they're changing going forward. I want to start off with the income statement first. And again, you'll see interesting nuggets and you'll want to understand how this turnaround is working. First, you look at the income statement, looks like a very uninspiring set of numbers, right? And therefore the thumbs down. Look at the top line, look at the operating profit, which has been calculated by Chinmay, who's the analyst. Provisions, which is the credit cost number at just about 7% and on a very, very high base. Look at that provisions number versus the PAT number. It's a 400 crore provisioning which is being done on a 800 crore profit after tax in FY25. Nearly 600 crore of provisioning done on a 400 crore of profit after tax in FY24. Clearly not looking good, right? And it is the problem with regard to credit costs, which is impacting profitability. Let's now flip over and look at the credit cost number over the last 4 years. And you'll notice the same trend. Look at the credit cost in FY23, it was low. FY24 was elevated, FY25 is elevated. Do we have the FY22 number as well? Because that number stood at 350 crore versus the 770 crore profit after tax. And that kind of caps off all the 4 years of credit cost and profit after tax. Now let's talk about profit contribution. And this is where it becomes very, very interesting. Look at the contribution of two pieces to profitability. Look at asset management and look at investment banking and their contribution to profitability. 80% in FY25 contributed by investment banking and asset management. Mortgage lending just 13%. Look at it in FY24, look at it in FY23, and what you will realize is a large chunk of the top line comes from these two, and the profitability, a larger chunk of that comes from these two. So it's basically the drag is coming from the lending business onto the profitability. Clearly going away from lending business makes sense at this point. Now let's talk about the balance sheet for a little bit. And I'll be quick about this. Healthy amount of equity compared to the borrowings, given that it's a retail lending business, even going forward, look at the AUM of the retail lending business around 2,800 odd crore, right? Now let's quickly look at, so a neutral here, you want to see improvement with regard to the way in which at least the AUM grows in the retail lending space. and we'll wait and watch as to how that growth comes through. But the guidance is 6,000 crore of retail AUM by FY27. That's a tall ask. Let's talk about asset quality now. The GNPA and NNPA ratios reflecting on your screen. Again, uninspiring set. The GNPA ratio is at 12%. The NNPA ratio is at 2.5%. Not looking good, right? And therefore, we've given this a thumbs down. Let's talk about return ratios now. Look at the erratic nature of it. 7.5%, 5%, 9%. Single digit. Not good enough for an Indian capital market play and financial conglomerate, which is why it gets the valuation it gets. And therefore, we'll give return ratios a thumbs down as well. Let's look at street cred though. The turnaround seems evident. Last 1 month, 18% higher stock price. 3 months, 64%. And 1 year, 75%. Clear thumbs up with regard to the performance that it has done with regard to shareholder returns. Fantastic returns given. Now let's talk about valuations before I look at outlook. Look at the price to book of this one. Around 1.6 times is the price to book. It trades at around 19 times price to earnings. And if I were to just pull this a little bit further and try and analyze it a little bit in more granularity, the market cap is around 15,000 crore. And this I've picked up straight from Digant Haria's blog. Let me be very honest, I've just copied his blog. Around 15,000 crore is the market cap. Recovery from lending plus ARC is expected to be around 4,000 crore. Based on fair value, the retail lending business should be worth around 1,500 to 2,000 crore. I've taken 2,000 crore as the number. 2 to 3 times price to book. And investment banking at 10 to 12 times earnings is roughly placed at 9,000 crore of earnings. Basically, it's the drag from investment banking or from the lending business which is being caused, or which is the impact on the valuation, which is impacting the valuation at least at this point. If that were to change, and that is changing, this may well be up for a re-rating. Hence, this becomes very interesting. Let's look at shareholding as well. And it's a closely held company, 56% interest by the promoter within the company. And you're looking at FIs which hold around 17%, DIs 7%, and public just a shade short of 20%. We've given this one a thumbs up as well. Quickly on to outlook and what to expect and what the commentary from FY24 year end, which was the turnaround commentary, seems to suggest. They will exit the less profitable businesses, wholesale and ARC. Businesses exited have been well provided for.